Hey guys, what is going on? So I know I haven't made a video in a few days, but let's get in there. So this week I'm going to be doing picking my pairs for next week. I think next week is still looking very phenomenal. Moving into next year, the markets are shaping up. So again, it's one of them ones where you don't want to be too hasty, but you also want to be very prepared because a lot of momentum can come in the market within a month, as we've seen over the past few. We want to be ready, and I think right now is a time where the market is on the verge of making some big moves, so a lot can change over the course of the next few weeks, month, and so forth. So keeping that in mind, let's have a little look at the DXY. So DXY, I'm just basically looking at it, and I'm going to zoom through these. I don't think I'm going to spend a lot of time just kind of really getting granular with each and every detail, because again, this is a part of my three-step process, and unfortunately yesterday I wasn't able to do the full selection, but I did get through some of them. And anyway, we're going to go through it. So looking at this, we can see the DXY has now met with a key area that we were looking at over here. 1, 2, 3, push down, and then we had a little bit of liquidity sitting in that area, which you can see refined on the weekly, and you can see that we tapped into it. We got a smooth rejection. Is it enough? Well, yes and no. I mean, we really and truly, we do want to see more of a follow through, and usually the start of a move doesn't really start quite correctively, and that's not what I'm really anticipating. But with the DXY, I have seen it to be quite common. So again, I do want to see a bit of a follow through into next week. If we do get a solid dropout, that would be a clear signal from the market, and then we just wait in anticipation for clear continuation, and we'd go. But also bearing in mind that we came up pretty quickly, we could come down pretty quickly, and we could get some stuff a little bit more smaller but weighted, and then it just starts following through, and then you just keep getting continuations and so forth. So there's many different ways that we're going to be looking at a DXY. Right now it's too soon to determine, but looking at it, it does look a little bit corrective, I'll be very honest with you. And for that pure reason alone, I am going to be patient with this pair because I do want to see it follow through. Right now, it's in that level where it's kind of creating a base. And if we look at the daily, you can see how the daily closed. Now, that's not your standard pin bar. It's more of just kind of a tap into the low, wick through, took out some liquidity and pushed above. And then this is kind of forming as your base, where we just see it as that, where is this going to be enough now to see if price retraces back to the high, or are we going to create some sort of head and shoulders? Well, I don't think the head and shoulders is as likely at this point. I think what's more likely is that we probably get a clear break, so we build that momentum and we just continue to the upside, maybe even near miss, and create something a little bit more depth, and then we get something in this line where this becomes this, and then we see it for its structure, and we kind of look at that. So looking at this and kind of understanding it in this sense, this makes sense, because then when you measure it out as an A to B move, we can then see it from here to here, take it, and then there it takes you into that high there. So again, it's just one that I will be bearing in mind to just see how it develops over the course of next week and so forth. But the real determining factor will be if we do just start selling off dramatically and invalidate that sort of trade idea. But we'd really want to see some daily confirmation on that equally. Weekly will be solid. So like I said, going into next year, we're really going to get a clear message of the market if we're going to have to be a little bit more patient with the DXY during January into February, or if price is just really going to start moving. And I think a move to the downside would be really nice right now to really take out these gaps. You can see that, you know, we tapped into this low, we near missed it, we took out the low, again equally to the high. We're doing the exact same thing. If I just invert this, you can see we created a low, near missed it, we gapped it, we near missed it there, we took it out, came back, near missed it again, near missed the highs, took out that high. You know, it's just this whole psychology of this is very interesting and very intricate. And I think, again, it's one nice thing about trading a range is that we can actually take full advantage of this. So we'll be looking at that closer in depth for next week. Looking at the weekly again, again, because I'm going through it on Saturdays, I want to really see where these key value areas are being tapped into. I'm not really too bothered about the internal areas, and I think this is one of the major turning points for me as a trader, is that, you know, I've not really spent a lot of time just averaging out on standard trades. I'm just waiting for key value, and right now I think if I just put this back, inverted, yeah. So right now I think there's not really much going on with the JP225. I mean, I know we're seeing the yen pair sell off, but the JP225 alone is just not giving. And ideally what I want to be seeing is that we're getting some clear moves, and right now it's just very corrective. We're just within this overall range. I'm not looking to take any trades in here whatsoever. There was this potential where we had that, where that could have been the move to tap into this low to potentially come back up. We didn't quite get that. It's now moving back to the high. It's fine if we see continuation. I'm more inclined to look for a long, but then the risky side to it is that we have left this overall gap here. We've left the gap here. And for those reasons as well, it just kind of makes me feel like, would I not rather wait for the value to be tapped into despite everything and then get positioned accordingly? So the other reasoning is, if we do get something like this and it comes in and it takes its time, but then we get something like that, it becomes more for two touch, where you've taken the liquidity out there, you've kind of had this sort of squeeze into it, and then we move to the upside, and then we just continue going, and it just always became some sort of very messy structure. Or more than likely we push up and then we had something like that to then go. Again, I wouldn't be put off by something like that. It's just, I don't think that would be very likely. I think if we're going to create continuation and go, we're probably just going to go, and then we'll come back up to these areas. So again, the JP225 isn't the most cleanest. There's so many different variations of what this can develop into. You just don't want to be getting caught up in it. I would just much rather wait patiently to just see how price develops, and then eventually when it gets to the key areas, we can then evaluate closer. But for now, I'll leave it aside and just focus on the yen pairs alone. Next one I've got on watch over here is, let's move that across here. So the next one I'm looking at over here is Aussie CAD. So Aussie CAD has tapped into a value area here, but I think there's a very simple observation here for me, which is if I measure it out for the move it is, that was really cool. And we move it in there. You can see even so, there's still a bit more of a move on it. And I think odds are we're probably going to come in and fill this wick, most likely. So I think removing the channel, seeing it for what it is, there's the possibility that this just continues in a corrective channel, and I think that's very highly probable. But I think yeah, there's no point just trying to get involved on this just yet. The best thing to do is just wait for an Aussie CAD to do its thing. It does this, it kind of sells, continues, and then eventually comes up and then gives you something like that. Then it's a no-brainer. Then you can start doing that, because then you're playing it off the back end of all of this. You're then playing the continuation to go to the high, and then you're positioned quite well for it. Then you just be aware of these sort of inflection areas. But again, you wouldn't be worried as much, because it would be a phase 1, phase 2, phase 3. So probably that one if it was positioned here, because then you can see that this impulse was equal to this impulse meeting with that, so then we'd be conscious about that. But ultimately we'd see the higher time frame when we zoom out on the daily, and then we'd see that it's overall messy anyway, but the context for the long makes more sense. But again, you're trading within a very corrective range here, and it's a trading environment you're investing in, not just to trade alone. And sometimes you have to realize that if it's not the best of environments, it's not going to be the best for you, because how much missed opportunity would there be because you're stuck in something like this? And again, you know, in order for me to get from A to B, that took a huge amount of time. I would have got positioned around about here, yeah, and about 58 days for me to make around about 200 and something pips. Now, don't get me wrong, sometimes it's worth it, but you know, it's about 2 months of the trade to make 200 pips, where on some other pairs can really capitalize. I mean, don't get me wrong, there was a time period over here where, you know, we had some trades, and that was a course of like 10 days where it moved for like 400 pips, 458. So it's opportunity. Aussie CAD, Aussie Swiss was nice, to be honest. There was the trading opportunity here, which was aligned with a lot of the other Swiss pairs. CAD Swiss, phenomenal. But again, it didn't give the cleanest of entries, so it was a bit more of a missed one there for me. I was looking for something a little bit more precise, but again, when you look back on it, maybe there was a bit of perfection, but it doesn't really matter. I was looking to see if it taps into this bit of area of liquidity, to then come up here, tap into that, and then sell off. But it did sell off early, and I guess it is what it is. At the end of the day, there was a clear run, and then now we're at the value area here. Would I be looking for longs? Not really. I think with this particular type of pair, this can just really keep going. So just be aware that, you know, sharp pullback wouldn't be uncommon, and then even something like that where it just kind of goes for a little bit and then eventually just drops. I think that's possible. I think this is just one pair you'd probably leave on the side with profit and then lock it in somewhere and then just let it be, or just see what happens, and it could just continue aggressively. And you know, these things do happen with these CAD pairs, is sometimes we just get into these very aggressive runs, and that was a course of 20 days, but that's like 700 pips. So again, another hugely nice position to be in. Aussie yen did have potential as well. I think from these areas here, we did always understand that this was a good area to sell. We rejected there and we started selling. In terms of trading opportunities, there wasn't really much in terms of the cleanest. There was one which I was eyeing up, which I'm not sure if you can see it, but it was here. It was more so this whole level here. Again, it wasn't the cleanest one. There was one that's just a little bit more refined once we had the commitment, and that was kind of the more me trade, let's say, right? This type of trade here, where I would have waited for this. And the nice thing about a trade like this, and I just wanted to point out, is that you can see that you have the high up here. Even if you got positioned inside, on the reduced risk would be a little bit not worth it in my opinion, just because managing it into the low. But yeah, you'd get about a 1.74 to 1. So at that point there, you could consider the break even as we kind of go there, or even locking in around about 1% if you really wanted to. And then you can see it just followed through. It dropped off for about 8%. I think at that point there, even though it dropped off for 8%, I'll zoom out just to see what it tapped into. Yeah, nothing significant. You know, it just dropped into 8%. You would probably lock in around about 6 or 7 minimum. So yeah, call it around about 6, leaving 2% on the table there, and you would have been out of the market there. Simple. You would have just aggressively trailed that. The thing is, for me, I probably would have actually gotten out of the market. Reason being is, yeah, it's kind of just played its move. So about 7% would have been the better option for me personally, just because I'm not going to look to be greedy in that sense. I'll just be happy to get what I get and just trail. But you know, it's easy to say in the moment now than in the live markets. Would have easily been between 6 and 7%, but that would have been the trade then. You can easily see that there's a stunning position there. It's like you didn't get the cleanest of entries here, and then price rejected, and then it gave you another entry and you went. And then, you know, had you survived through it, it wouldn't have really made a difference. You know, you'd be 11%, but ultimately you'd have to watch a 7% trade pullback all the way to break even with your stops open. You know, there's just so many variables to it. I don't think that a lot of people consider those things. So aggressive would have been better in this situation. And yeah, that was the Aussie yen one. I don't think I'm looking for an Aussie yen trade for next week, to be honest. There possibly could be one, right? I think I'd probably be marking up these sort of areas here, going on to the 4-hour, refining it, and just kind of looking for something where it kind of meets with that. But I think it's in a run of momentum now. I think we're just going to continue moving to the downside, which is great for yen sellers, but obviously not so great for people who are not in the market, because I don't think there will be much clean opportunities on Aussie yen alone. Aussie US dollar. I think Aussie US dollar definitely is another one that kind of went off the radar a little bit. I was looking at this over here. So I took a break even on this particular trade, where I realized something though. I learned something very important when I did take the break even. So I took the trade here and I put the stop loss roughly around about there, right? And I do this quite often, and I've noticed it when I went through data, and you know, I do tend to get a bit tight, and I'm looking for the best risk reward, and that's the reasoning for it. Now sometimes it plays out, sometimes it doesn't. It is what it is. But a lot of the time, had I just been a bit extra and even went like there, I'd survive a lot of my trades and I'd make a lot of money, a lot more money, right? When I weighed it up, it was like I would be in trades more often. That was the better way to look at it. Not more percentage, wasn't always the case, but it was, I would survive trades, and that would be a little bit nicer in terms of the feeling, because then that would boost me for my next trades. So that was something that I kind of just dwelled on. But anyway, so as that kind of came back, as it dropped over here, it dropped for like 0.8 something, and then I was roughly running around about a percent-ish, around about there. And then I decided to move to break even, and then the next candle just break even to me, because I knew that there was news coming out as well. So I was kind of like, and it wasn't even related, it was like CAD news or something. But anyway, I just kind of just wanted to be a bit more safer, I think. Then the nice thing about it is, even though I took that, there was this, which was the actual trade that I was looking at, but I went for the larger stop loss for personal reasons, and that was it. And then when we kind of just had these rejections, I think on the 15 it even looked nicer. You could see it like that, and it was just like, yeah, you know, if you look at that in hindsight and you look at it, I think that looks really nice as a trade. You know, you can see that value was there, tapped in, came up 1 2 3. It didn't completely fill that whole move, it didn't really have to, but you know, overall tapped in there, pushed down, gave a nice insurance entry, and trading back within structure. And it was just like, that looked really nice in the moment. And I think taking a trade like this, looking back on it, I was really happy with that. You know, even 8 pips there was solid. And then you watch that fall, and you'd be very proud of a trade like that. Honestly, I like trades like this. This is something that I would 100% be happy to take time and time again. It's just sometimes it doesn't play out, and this was one of those cases. So again, thought process was good for me, because I did initially think about the protection up here, which was good. It's just still, even though it came back up, I still didn't consider adding a little bit extra on it. So that's something I'm going to consider in going into my next trades, is always adding a little bit extra, just to give myself a little bit more breathing room. Aussie New Zealand, I think, going into next week, I think it's not really worth taking a trade just now for me. I think with the DXY potentially going long though, there is potential, but I think taking a trade in here is great. There's potential. I think there's a high probability it's going to follow through, but look how close we are to this low now. It's one of those ones where it's just like, you know, am I forcing something just to get last minute trades in? And I don't want to just be squeezing into the last minute trade. So I'm just going to be looking at things like this, and then to this low here. When you do kind of open up to there is a lot of room, yeah, absolutely. But then at the same time, it's one of those ones where I don't want to be going for something so small and tight over here just now. I want to wait for something that's got a little bit more depth to it, something which was a little bit like this, but unfortunately I wasn't able to capitalize on it because just because. But anyway, move on to the next. So I'm going to be looking at this as the area of interest right here, if I am going to be taking this, and then I'll probably wait for a 3 touch, most likely, where if it did do something like that, that would be great. And even if it did come up for a 4th, I wouldn't be surprised, but I don't think it will. I think the likelihood is that we've created 2 tops, we come down, we create 2 bottoms, and then we just make our way, we create this, and then we sell. The other variable is that this becomes one section of its own. This then takes its time, gets over here, comes up here, breaks a little bit higher, this comes down, and then we get this sort of expanding into it, and then it sells. So then this actually ends up looking like a retest into the previous structure, and it's more so something like that. That's the other variable that I would look at. So like I said, you don't want to just be taking a trade based on what it looks like right now. Wait till it gives you clear indication. Other cases, it just sells off. So again, I just want to wait patiently on this one now and just see what happens. I think what it would be nice is that if we do get a structure here, if it's something like this would be nice, because you can see clear sections to it, and then there's a story build up to it. I think if we got something small and a bit tighter, even so, it's just I feel like the small and tight one could be slightly higher risk. So I would be slightly more on the conscious side, and I would just wait, see what happens, and if it did something like that, then yeah, I could I could probably look for a trade there, but I would manage aggressively into that low. I would, if I did get involved for whatever reason, let's say risk entry in these areas, protection was around about here, that's more than enough. I'll probably want to be aggressive into that 1.5, so I'd probably go at break even. And then if it did come up for a 3 touch at some point or pushed above this and that, I'd be able to deal with that. That would be how I'd take Aussie US dollar. And I think most likely the same with the other US pairs. We'll see, because they've just moved away from some key value areas as well, like GU and EU. Aussie New Zealand. Aussie New Zealand's also a very nice one, I'll be honest with you. I do like Aussie New Zealand a lot. I think fact of the matter is that even though it's moving in this corrective channel, it's kind of feeling like it's exhausted at this point. And one thing that I'm noticing is that if I remove all of this and I just kind of drill it down and look at it, it's kind of like the liquidity was sitting here. It's kind of M-starred in this area. There was a little bit of liquidity there, but whatever. And it's now just heavily rejected. And what's nice about it is when you actually really just identify this candle on the monthly as well, you can see that we have the nice pin bar to it as well. So heavy week monthly momentum is nice. You know, it's a good sign from the monthly. As we've seen previously, it does respond well. And then we look on the weekly, we can see that, you know, it's really engulfed that candle, just that little bit of wick there, but it's really engulfed it, heavy bodied as well. To end like that is phenomenal. Looking at it on the daily is nice too, right? The nice thing is now that we're clearing this low here, it's no longer sort of giving us that thesis that we're in the corrective wave to the upside. It's actually giving us the idea that we actually could be in a real momentum run right now. So stay sharp. So then I actually look at it a little bit closer and it's like, okay, in terms of a run, let me just go to the 1 hour. In terms of a run, there was a decent trade here, but it would have been quite premature in the sense that you'd be taking it with quite a bit of risk. So it would be more for reduced risk entry, but very, very difficult to decipher and quite risky. I think over here, if we look at this a little bit closer, it is channeling right now to the downside. So again, another one I would be quite vigilant with. I don't think I'm worried about that channel. What I am going to be looking for is market open, it drops off a little bit more, and then we just get simple continuation like that, and it continues. And boom, you'd get in for something like that where you'd be looking at it a bit like this, but in a larger scale, and you'd be good to go. And then I'd probably look to get a risk entry on that, to be honest. And Aussie New Zealand though, you know, not my most favorite pair, I'll be honest with you, but it's definitely one that has a lot of potential, I'll be honest with you. So let's have a little look at the sizing of that. Yeah, I would say 20 is not uncommon for this as well. 20 is pretty decent, and you'd get in for a risk entry on that. And ideally, you'd be looking to play a 10% trade there into that low, but with the trade idea of this being a much bigger play, for it to just continue and follow through eventually over a longer period of time. But anyway, thought process is there. That's an Aussie New Zealand trade. I don't think we're looking at that overall bigger trade, but I'm looking at this range here as a 10 to 1, and it will be a momentum play for me. The only negative here is that this overall move is just very corrective. So you just have to understand that if it did get very corrective and took its time, it's a part of the environment you're trading in. I just know that what's nice about Aussie New Zealand is that sometimes when it's done more than enough, it goes. And you can get decent runs like this one, this one, this one. I mean, look, at the end of the day, it may not be the quickest, but it will definitely be one of the nicer ones. So we'll just have to wait and see. I think this is the perfect time frame to be on for Aussie New Zealand. Truly, you can really identify really good structures as well, and you know, be in a position to really capitalize. I mean, look at it here. Maybe for somebody that looks quite messy, but for me, it's actually quite good psychologically. You know, you can see that you had this, and then you had the 1, 2, 3, tapped into it, sold off, failed to commit, came back up to seek liquidity, took out that high, and then now just sold off again. This is really good psychology in the sense that this could be a really good run to the downside. So that will definitely be making it into next week. Next one I've got on watch is CAD Yen. Okay, so in terms of CAD Yen, I think it's one of the nicer yen pairs, because looking at all the yen pairs side by side, CAD-yen and UJ seem to be the ones that really started to move. UJ, unfortunately, is backed by the US dollar index, the DXY, and it didn't get the full momentum that it deserved. So unfortunately, that one is just probably going to be a bit messy, and it is what it is. But ultimately, we're looking at these yen pairs as a short right now. Obviously, there was this point of a gap to this liquidity here, but it never needed to tap into it. You know, you could really argue many different things. The interesting thing is that we've broken that low there, and we formed continuation below it. That's solid. That's absolutely solid. This whole section here is great. The more interesting thing for me is that whilst the JP225 now gets a bit corrective, do we come in to get some sort of 3-touch? If we did get something like that, that would make a lot of sense. That would make a huge amount of sense right now. We'd get a more weighted flag into some point in December, and we drop off. So I like this a lot in terms of a trade thesis, but given the momentum run, given that we've got more than enough on the 4-hour, the daily, even the weekly, actually, if you look at it on a weekly perspective, it's like, the stalling doesn't really fit in with the overall picture. We can just go. We don't need to sit around. Look at it over here. We've kind of come into that area multiple times. We failed to commit. We look at some of the other yen pairs, you would see exactly why. So I think for that reason, I think right now what we can see is that this is the low over here. And if we do just commit, break through, come back up, do that, come in again, and then we create something like this, even with insurance entry, whatever, you can still get involved on something like that. And I think that's solid. That's its own piece of price over here, giving you exactly what you need, and then you can take that as the next continuation to go short, and I think that's solid as well. So definitely CJ is probably going to make it onto my watch list for this type of trade. Yeah, it's going to be a banger, honestly. Not even CJ. I mean, I might even filter CJ off for another yen pair. But anyway, this is one that I'm really happy to go over, because I'm not a CAD yen CAD Swiss trader, but I can trade CAD Swiss. It's not my most preferred pair, and honestly, like, you know, there's much better pairs on watch than a lot of these pairs. But CAD Swiss this time did come through with a good entry. So we can see that liquidity there, correction below. Bit more for M stuff, failed to commit, came up, tapped into it, and then what we saw on the 4-hour was super, we tapped into it and then super momentum back down. Arguably, you could say that this little bit of liquidity, blah, 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 but I'm going to not worry about it because it wasn't ultimately tapped into, maybe on different data. The place that I really want to focus your attention is over here, and if you look at it on the daily, you can see that, you know, we had the daily momentum, we pushed in, then we just started consolidating sideways. On the 4-hour, we can equally see that we had this. And at that point there, it's also one, I guess, is a tricky one, because you're not sure, because you're basing the pair itself. I did see this trade play out from start to finish, and you know, it's phenomenal. And I think you'd see it as a 1, 2, third section. And usually, what do we know about the third sections? They're not always clean cut. They don't always just respond from here. We know that, again, it could just do that and then come in and do whatever it needs to do, right? So it's one of those messy ones, but I think we got a clear message at that point. And then when it started to follow through to the downside, there was, you know, entries on the way down. And yeah, I think ultimately there was many ways that one could have traded this. Truly, I think it's just given opportunities after opportunities. There should have been multiple scale opportunities for loads of people here. I think first entry here, more on the higher risk side for me, but even into that low, you got about a 3-to-1. Management wise, you probably would have still had your risk open just because of spreads and it just not really committing in this and that. Even if you had break even, you might have just survived it. And then over here, as it kind of approached this low here, 2.6, maybe you'd probably, coincidentally, if you wanted to lock in 1%, you'd be knocked out. So it is what it is. Usually I'd wait for it to get to the low here before I start locking any profit. So it would have been at break even. Came to about 3, so would have had about 1 locked in at that point, and that one would have just probably still been running. So that one would have still been running around about 6-ish, 7, call it. And the next one would have been very clean cut as well. you would have probably been tagged in just there. Oops, wrong one. Tagged in right there. Stop loss above, probably where you would have entered the market on the next one. And yeah, again, as you broke the low, you'd be running 1.8, so 1, and then that one would have been running 5.72. And then you've got another trade here that this one again was not the easiest one to decipher, but this made a lot of sense again to me, for the way that I trade. Yeah, the next one's solid, to be fair. I mean, look, this one was a bit more tricky one. Of course, if you're running profit, you could risk it. It's up to you, situationally. But I think, 17 pips on that one would have been all right. You would have survived this easily. You'd be running about 1%. You'd have break even locked in as we broke that low. Yeah, you well easy to manage. So again, another trade, you'd probably be running another 5.32. And this one was perfect, honestly. This was a very easy one as well. You could have even taken it a bit larger, 15 pips, give or take. I'll probably go a little bit extra, 17.4. And then over here, yeah, you got about 3.1. So even if you add all of that up alone, you can see that the abundance of opportunity on the scaling opportunity and stuff. For a CAD Swiss pair, I mean, I was very surprised when I did this and I was looking at it and I was like, holy smokes. It's a proper good trade. So like, call it 7. Yeah, round about 13. Wow. Yeah, you're looking at a decent amount. You're looking at around about, just call it 20% there, 20-ish%. Yeah, solid, absolutely solid. So yeah, that's CAD Swiss for you. Probably for anyone new watching this video, you're probably thinking CAD Swiss, what an amazing pair. But I'll be honest with you, it doesn't always move like this. Not always so clean, but recently, wow. This is stunning. It's not even finished its run. Probably still going to drop a little bit further. But yeah, management-wise, if that was 20% right now, I would probably be aggressive. I'll just size that up around about here. Move the stop losses here. And call it a day. Or you could be very creative with it. However you really want to deal with that, you can. I'd probably lock out 10%, let the other ones run. It is what it is, however you want to see it, but phenomenal, absolutely stunning. Huge opportunity there. You can see that by just understanding and being able to identify the higher time frame to lower time frame, to then seeing the intricate details, and then having the variational way of just kind of positioning yourself within these particular types of trades without having to be too aggressive. You can still get a lot of percentage out of the market. So again, that's the power of scale within a run. You could have left it at 6.6 or you could have walked away with 20. Depends on how switched on you are, how risk adverse you are, and how much you really want it at the end of the day. I think that's what it really comes down to. I think when I go back and look at a lot of my trades and a lot of the way that I've been trading and the psychology behind it, it's when I've been very fearless and very determined and just focused. That's when I've really been performing my best, and keeping that mindset has really pushed me forward. So again, another stunning pair right here. We've got CAD Swiss, which was just moving. Now we've got Swiss Yen. Swiss Yen is definitely one of my favorited yen pairs. Not always the cleanest, but definitely does move really well. There was actually a banger of a trade here that I was looking at. So I woke up early on the morning because I was my alert went off actually on Hong Kong 50, which I'll go into after. And I basically had this particular trade here where we were looking at shorts the night before, but I've always been reminded to stay a bit neutral. And what I was really looking at was this point here, and I wanted to see how it responded here. So I thought perhaps maybe we'll have a double top, a push away, a push away from here, and then in the morning I'll wake up and there'll be a trade here, and that will be it. Bang, I'll be good to go on these yen pairs. And I had them all literally just side by side, looking at them on a separate open list over here. I was just looking at the yen pairs, but it didn't come through. So then I thought I was looking at the 15, and I clicked on the 5, and I was like, hang on a second, let me have a little look at this. And oh, it wasn't this trade here, sorry, apologies. It was this one right here. So it was right here, and then I was looking at this and I was like, okay, so it's tapped in. I was looking at this to be the continuation, and it didn't come through. And I was looking at it a little bit closer, and I was like, hang on a second, what if we then expand as well, right? Because some of these yen pairs at this point weren't ready. So I then had to kind of really start thinking about what would happen. So I then had a little bit of a closer look, and price did push up. And then as it tapped into here, I was looking for the exact same thing at that point. So I didn't get a trade in there, but I did get a trade in here. So I was looking at this, and I was looking for the exact same thing. So the nice thing is it was through the high, and it was a very counter trade. But ultimately, when I saw it like that, I was like, that's nice. That is very nice. So then I saw it like this. The trade was here. Stop loss just there. And then that was the trade, and it just went. It was around about 6.2, but I think I saw it on the 5 minute at this point. And I was kind of being a little bit more risky at that point. Probably not the best to do so, but then I waited for the 15-minute close, and it was just around about here. Next candle, and I was in, and that was it. Ultimately, I was actually looking at this one when I woke up, and I saw it like this, where it was a bit more flat. So I can see why I took the trade, and I understand why, but then I look back on it and I'm like, was it premature? Because the problem about this one is, in the moment it looked great. You know, you go on the 1 hour as well, and it was a 1 hour entry actually, not the 15-minute, but I was looking at the 15, hoping that I took it, and that was the trade. And I was like, do you know what, that looks nice, that looks really good. Then I convinced myself, you know, this, and then I went off and did some bits, and then that happened, and it went, and I was like, nuts, you know, crazy. And it was a 10% trade in the end for me. So yeah, that was ultimately it. But again, it was an easy in and out trade. Again, this was something that I learned, that, you know, you want to kind of add a little bit of protection on your trades. So as I was talking about with the other trade just now on Aussie US dollar, you want to always add a little bit extra. I mean, look over here, I was going around about 50, call it around about 10ish, and it was very aggressive, so it is what it is. But I could have gone around about 25. I mean, 25 is just irregular, but at the end of the day, like, you're playing a bigger move. And what I did was I sized it up here to here, and then I put it over there, and I was like, okay, we could probably come up to these areas, probably fill this. So I was kind of looking at the bigger move, but ultimately I think when it ran around about 4ish, I would have been out for 4% there. Most likely I would have been out for 4% on this trade. Give or take, any trade I took would have been out. So yeah, that was Swiss yen. But now Swiss yen going into next week, it looks good. Swiss yen going into next week looks really nice. So we just need to kind of wait patiently. Now this one's interesting because we did have that area here, but this was the point of sale, and we seem to have responded from the point of sale. And again, we haven't tapped into the high of that, but that's completely fine. We've actually responded from the point of sale. If you looked on different data, potentially we did, and you know, I'm not too bothered about that. But ultimately, I'm just looking at this area up here, and I just want to see how this price responds. Do we come in low here, and then we come up, and we come up and tap into this, and then we sell? That will be interesting to see. Do we get a 1 2 3? A 1 2 3 would be nicer, meaning that we kind of come up here, and then we come into the base, and then we do that, and then we sell. I would much more prefer this, to be honest. Something like that would be perfect for an entry, where, you know, you'd basically see it as 1 2 3, 1 2 3, and then that's just the clear run into the downside. Kind of gives you that head and shoulders feel to it as well. And then that's just basically the run to the downside, starting from these areas, and then within there, maybe even you had a 1 2 3, like we saw with I think it was Aussie yen. Within that, inside here, we get like an insurance entry, and that would be perfect. I think the insurance entry would be the best option as well, because if we did get a push down from here and a continuation in there for whatever reason, it looked like that, and you got positioned in that for, wow, yeah, probably even 12-ish%, 12 pips. Yeah, you get about 2 3 into that, and then ultimately we're looking to play this bigger move, which could take some time, but yeah, that's about a 20% trade. So again, even with the risk entry, it's just the risk entry will come with a lot more risk. You'd want to go in a little bit extra, so you'd probably go in with about 25 really and truly, with the risk of this really coming up higher and being a part of this corrective channel. So you want to look for that insurance entry truly, because you want to mitigate against it being a part of this. But I don't think it will be, because we're now just creating continuation, but in the form of a correction. So yeah, it's one of those ones. It's kind of hovering its way outside. So let's just wait and see. A 2-touch would be preferred. 3-touch possible. If we've got a 2-touch insurance entry and we could manage it into that low, I would take that as well. I'll be honest with you. You know, it scoops up, taps into this bit, pushes down, gives a small continuation in there. Probably more refined on the 5. Not the best, but it would be more of an advanced entry. And then you trade it to manage it into this low number 1, manage it into that low 2, and then just potentially see it follow through, and then the continuation comes somewhere down here. And then that just always became a 2-touch with continuation below. You'd see many of those, you know. If I came up here and just find an example where you had something like that, even in the sense like this, just as an example, obviously this is a little bit more smaller because it's higher up in the run, but oh, perfect, actually I found one. So you've got one right here where high up in the run, let's say you've pushed down and you're then correcting, and for whatever reason, when price just commits, it then just gives you some sort of scoop like this, and then drops, breaks, retests, create continuation below, and then your entry is always protected up there, and then despite anything, it just kind of just continues. So then it's like follow through, V-shape, push down, small little correction, this, and then it just continues going and does whatever it needs to do, but you've always been protected in those areas. And that is how I kind of see this area here, is if we do get something like that, I might be very well protected for the future move. But again, it's like I'm not looking for a head and shoulders right here. It's not coming from the best value area. There's better yen pairs, but I just wanted to emphasize on that, and especially the fact that if you look at the higher time frame, it makes sense to be a little bit vigilant on these yen pairs, because we're seeing the JP225 as well. It's just the nice thing about this is look how the dailies responded to the point of sale. Look at the weekly as well. The weekly had that heavy momentum, then it just ended with a bit of indecision. But the nice thing about it is it's not really retraced much. It's just kind of been a bit indecisive during that week, and we can see why, because it was creating continuation, so it's completely fine. And then we look at it on the 4-hour and we see that, okay, if we look at it, it was correctively channeling into this area. It looks like it's come to the end of its channel by throughout this week, and then now it's just ended with a decision. So now we just want to see follow through. If you wanted to go for a lower risk entry because you weren't in profit, you would opt in for something like that, where it done whatever it needed to do up here, come down here, create a continuation down here, maybe even retested that, you'd then get positioned in there, and then that would be solid for an entry, even a risk entry alone in there. Yeah, I think that would be great. It just depends what it's coming from. If that becomes corrective and that's corrective, then I'd leave it alone, because it would be still high risk at that point, because it's a correction into a correction. But ultimately, if you did get just a follow through like this and that, I think that's low risk, because you can manage that into there for a 1 point whatever, even with 26 pips, and then a 3 to that, and then if you're playing the bigger move, about 8.3, and it wasn't much difference to the insurance entry of about 10% we were looking at. So just something to bear in mind. I know that there's a lot of variation there, a lot of thought process, but we are in a run of momentum, and you have to kind of identify what structure we're responding from, and you know, the environment we're in, and ultimately we have this. So if you do isolate it into what it is, you know, it does make a lot of sense now, so that if this does whatever it needs to do and it just corrects and then it drops off, you would always see it as independent structure, hover, which becomes its own independent structure here, and then it commits, and then you'd see it as a pattern separated 2 structures. So that's how I'm basically looking to take it. I'll probably mark that one up. EA, I think EA is wicked, honestly, absolutely one of those crazy pairs where it just does insane things. But the beautiful thing about it is if you get involved on these insane things, you can make a lot of money. So you just want to get really good at trading pairs like Euro Aussie. Truth behold, when it taps into the value areas, that's when it does the amazing things. So it's one of those pairs where you just want to be patient, and then you want to know where and when you want to get positioned on this particular pair. So again, right now we are in not the nicest environments, but we can see that, you know, with this corrective channel, it does look like it's aiming for the upside. This gap over here, I'm less concerned about it being a gap now, even though it was kind of the origin of that, and it did really look like it was going to tap into that. It had the strong sort of trade ideas to it, but now I think with the momentum burst to the upside, the continuation push 1 2 3, we're now coming into these areas. We'll get a clear message. If we break through those and then we create continuation, which could take a bit more time, I think that would be a solid message for the market for it to continue and go up to the upside. Am I going to be looking to take Euro Aussie? Not quite yet. In fact, that would have been the really nice entry for me if I go to the 1 hour. Honestly, if you guys took this trade, phenomenal. I was probably more inclined in something like that. I would have, yeah, hands down, I would have loved to be positioned on something like this. You know, this is kind of like more so for go-to in a sense. Could have been a break even, may not have been, but something like that would have been solid. It's risk entry down there. I'd happily take the risk in that sense, and then I'd play that to the upside. I'd be running about 6.8 on that personally. So nice trade there. I can see it. I can see it really well. Happy with it. Ultimately, obviously, there was the risk that this would come in, so probably would have had a bit extra. At that point, they were on about 50 something pips. It's worth it. Into that high, still playing at 8 to 1. So yeah, great trade. Really nice trade idea there. Trade's done for me right now. I need to wait for the next continuation, and I don't think when I do compare it with the other pairs that I'm going to have on watch, I truthfully don't think that this is going to be the one that I'm going to go with. But let's have a little look and see. EuroCAD. Have a little look on the weekly. Yeah, I don't think EuroCAD's the one just yet. It's nice that it's responded to the low, right? Tapped into the low, pushed up, didn't give the best of continuations. I was looking for that 3-touch, and I think a lot of people were. We were looking to see if price then eventually came back down into this area to go like that. That would have been stunning, absolutely stunning trade there. We would have been positioned so well to go, but in this particular circumstance, it didn't. It just responded to something like that, which isn't your typical go-to anyway. And yeah, it just ended up following through to the upside with momentum now, so we just need to wait for continuation. I think we're getting small signals of a pullback here, so let's just wait and see how that develops. If we do get something like this, that would be nice. Is it responding to 2 touches primarily? I don't know, but if we do get corrections like that, where it kind of just stalls and sits in this area for some time, I'll be able to get positioned on this. For whatever reason, I'll probably go a bit extra. Call it 20, 25, 26. And then I'll be playing the bigger move there for 9.77. Not bad. I think there's a clear run to the upside. I don't think we're looking at shorts anymore. I think we're definitely in that longs territory. And I think a great measuring tool that I've been taught is basically... and you'll see Mark use it a lot, is you just measure off the 50%, and you can see we're well above the 50% of this overall range now, so we're back in bullish territory now, so it's happy to see this kind of continue. EuroCAD could be a gem for next week, so I'll have a closer look at that one. H4, nothing. I think it's still in a bit of a squeeze within this potential expanding. Liquidity, near miss, took us at that high. I would love to see this go long right now, but right now there's just not enough. I think what we need to wait and see is what happens. If it does something like that, it drops off, and then eventually just gets the momentum and goes, you could get a really nice continuation some point mid-December, and then this just goes. That could be nice. That could be very, very nice for end of year, but only time can tell. It's corrective, it's messy. I don't want to touch that, so I'm going to leave that alone. But that would be a great trade idea. It's just at the very bottom of the low. If it was high up in the run, again, it's very messy, but you'd like it. Euro Swiss. I didn't really see much on Euro Swiss, to be honest. Other Swiss pairs look nicer. It's one of them ones, man. It's just messy. Like, this is what CAD Swiss could have easily done to me, so it's one of the reasons why I stayed out. I mean, yeah, again, it comes down to the individual, where your preferences are, what you like to trade, how you like to trade, and so forth. And I could decipher so many different patterns right now You know, it's just, yeah, it's one of them ones. But again, if you were looking for a trade on this, I'd probably leave it. There's much better pairs on watch, so yeah, just move on from that. Don't waste your time. Euro yen. So euro yen similar to Swiss yen in the sense that I was looking at this. I think this one actually could actually be an underrated gem now for a continuation higher. Now the reason why I'm looking at the counter trend is you've got this as a 1, 2, 3, but then you've got this, right? But then if I expand that out a little bit more, this could be turning into something a little bit larger. Not so concerned about that. But this looks phenomenal for a long. I would just be so vigilant because of where we're coming from. It's kind of like we tapped into this value, broke above, M-starred, push down, continuation to go short right now. So it's not the sort of place where you want to be looking for longs. I'll be honest with you, that's the truth, right? It's not the place you want to be looking for it, but ultimately it doesn't mean that you'll be wrong to look for it. Okay, that's something that I think is so important. And when I really do decipher this and I look at it closer, you can see that, you know, if you look at it like this, you had a 1, 2, 3 channel into this. Then what do you have? You have the hover, very similar to what we were looking at on the outside of Swiss yen. And then you get this and it comes back up again and it sells. Don't be surprised if that just sells off. So that's why I say, like, stay neutral, something like this. But if you get a clear message from the market, it's better to wait. So even if you were looking at this as an expanding, it's better to let that one go. And don't get too caught up on it. Just see it as this, right? You've got the trade idea here. You've got your internal 1, 2, 3 into that high. For whatever reason, the yen pairs just didn't have enough liquidity at the time. So then what happened? It came a bit of a running channel, spiked up, tapped into the high, and then eventually came back down, broke the low, create continuation through the low. Okay, that, if that makes sense to you. So that's the low, the continuation is now here. That's your first touch, that's your second touch. If it pushes back, and then you get something like this, and it would be 1 to 1, call it your 2. No, sorry, that's not your 2, but anyway, that's still part of your 1. So it'd be like this. This is your area 1, that's your area 2, that's your area 2, and then for whatever reason, that's your area 3, and then we go. And I think that would be a part of its own section 1, section 2, section 3, and it would be very equal in that sense where you'd see something like that. And I think that would be solid. That would be really, really nice. Again, you don't need to have all of this stuff on. Once you understand it, you can just clear it off. You can understand it as, that's how I'm looking to take the trade. Then you zoom out and you look at it over here and you're like, okay, cool. Yeah, I see it. Pattern separation, you know, that was its own continuation, own continuation, own continuation, own continuation, part of its own continuation. And then we got into low. Simple, right? But again, if you overcomplicate it, you're just not going to be able to see through it. And it makes sense because when you look at the channel, how we're responding to the channel, we've actually come up to it correctively where we're actually approaching it in the sense of a running channel right now. So this has actually become evolved, and this has now become a larger channel to the downside. And if we look for continuation, it actually becomes higher probability. So I just wanted to kind of point that out so you can actually just see how things are. And yeah, it looks pretty good. So that basically covers EJ. I'm definitely going to be putting EJ on watch next week. Euro USD. I think in terms of just EJ quickly is you want to keep that a little bit neutral as well. If that gets invalidated and it does push higher, then take a clear message from the market and be patient, because you know there's a clear run to the downside, but if it does start pulling back at some point, you have to know when to shift your bias. And I think when you measure out that internal range and you're pushing above these areas, that's when you know that you're going to be looking to go long up here, right? I think that literally that point there, your 50% is your line in the sand. That just that little piece of price there is your absolute line in the sand. If it breaks above this and doesn't respect this area, then we know that this ain't the trade, this ain't the environment, this is it, we're moving on. Just wanted to kind of point that little piece of information out to you. Euro USD, booming. Honestly, I love it. I love it, absolutely love it. Now, the one thing that I do have in mind is that you have this, which is beautiful, we can crop through that wick, but we have this, right? And we came back into this area of liquidity, which I'll just draw on for educational purposes, right? So we've got taps into that, 1, 2, 3 into it, pushes away, insurance entry territory, which is also nicely in line with our EJ thesis, right? Where, you know, when you really look at it, however you want to draw it, doesn't really matter. But let's just say that's your angle, and you can see overall this was channeling, kind of just pushed up, tapped in with its 1, 2, 3, and then pushed away, and now we're coming to the downside, which is nice. Now I think I've got way too many lines on here, so I'm just going to clean this up and take them off, as I don't need them. And then you can see that this was really my line in the sand, where I wanted to see how it responded to this, but ultimately I'm not going to let that deviate my views from the higher time frame. Now, in terms of an entry, I think the 4-hour would be perfect. However, I do want to be a little bit more on the cautious side of things, because when I did look at this, I was like, it didn't quite tap into this fully, but with next week having inflation, CPI, things like that, could EU go higher? That was a real question I had in mind. Could I see EU go higher and tap into these areas? And I think the obvious answer was yes. So what I'm really anticipating is we're not ready, and we go and we tap into these areas, we hover, inflation comes out, and you go. Just remember this one, because I truly think this is the gameplay. Obviously, inflation's on Wednesday, so a lot can happen between now and then. This could just really sell off before then. So it's one of those ones, you know, you might even see yourself see that, and then price is just doing this and suddenly makes its way up here, and then we're back down here. But like I said, I think we, even though we have enough here, and this looks phenomenal, this looks stunning, right? Don't need to convince ourselves of all of this stuff. It's just a little bit of news there. We just need to be mindful. I'm going to remove this alert because yep. If we get continuation, this will be good. I think the best point is I'll go to 15, refine this. I'll put my little marker on here. And how I'm looking to take this is literally so simple. I will be waiting to just see how this develops. And if we tap into that, we push down and we get some sort of 5-minute AFT in here. I'll look, oops, go 5 minute. If we get a little AFT in there, that'll be great. I'll be happy to take that. So we pushed up, push in AFT. I'll be happy to try and trade this. Yeah, I could trade that into there. And then that being that, we'll just see if that follows through, and then we go, and then by Wednesday we don't need to worry about it. By Wednesday we're all the way down here, and then what happens is inflation ends up going out and boosting price, and it just continues, and then DXY taps into all-time highs, from not all-time highs but high value area highs. So that's kind of the two ways I'm looking at it. So I'm just going to be a little bit more vigilant with it, but then at the same time, I'm not going to give it too much power. I'm going to just trade it for what it is. And right now it's looking phenomenal, especially from the 4-hour. 4-hour paints the picture clear as day. Don't need to go on anything lower right now. You can see it here. Value, tapped into it, took it out. Now we're selling. If you look at it, get a bit closer, and you want to just really see it for what it is, you know, you could even see it like that. And it's done more than enough. You don't need to start speculating and stuff. You got everything is there. You know, the 4-hour looks good, the 4 hours in. Now we just need to see 1-hour continuation, which we're getting. Perfect. 2-touch would be phenomenal. Internally, 15-minute flag, 5-minute refinement in that flag right here. Boom, you're even better, right? Again, like I said, it's something that you will build the experience on when you get advanced within the system, but we'll see how that plays out. 4-hour, daily, weekly. yeah, I'm not really looking for anything on this just yet. I think it needs a bit more time, but if I go into the daily, that did look interesting. We can see here that it's just tapped into this area here. Yeah, I'm not into this trade right now. I think it's coming to the upside really and truly. So long continuations, all about it. I think when you look at it, I'll zoom out a little bit just to here, and I'll just show you what my eyes instantly gravitate towards is we have something like this. And we're just making our way to fulfill that. So I think that could take its good old time. I think if we got continuation, and then yeah, just see continuation like this, and then it just moves higher, and then you just get involved in something like that, and it's a phase 1, phase 2, phase 3, and that's exactly how I would be seeing it. I just think that needs about another week to develop, but I could be wrong. It could be a little bit short-winded. It could just be more continuations to go, and you could just see something like this over the course of next week. And like I said, I wouldn't be too surprised to see something like that develop, and then it goes. And then you look back on it and you're like, oh, I thought it needed a lot more time to develop, but then it just ended up being in that area, retesting some of their stuff, and then just went. So again, just another trade that could go under the radar here. I think it has a very good potential to move to the upside. It's created a bit of a base here as well, which is nice, so that it's really just kind of tested that area, really failed to commit. So I think that's a very nice point to it as well, is that this actually ended up becoming a middle section in itself, that we can then see it like that. So beautiful, really beautiful trade when you actually sit down and just really decipher it. And I think if you go to the 4 hour, again, a really nice area where you can just really decipher it and see it. And the good thing about it is that it's leaving room for the short. So where you can see here, when we actually identify this level, we can see the psychology of it, gaps, failure to commit. And then what's happened here, we've had a phase 1, phase 2, phase 3. Nice thing is that if we even measure that off, ultimately, if I look at it from here to here, yeah, we still have a bit of a run in it. So yes, honestly, it's great. It's really, really nice. So just want to see that play through. So I'm going to put that one as well on the side. Euro New Zealand as well. One I feel a bit skeptical to just take trades on sometimes, because it can be a bit messy. But sometimes when it's good and it's going longs, hey, don't hesitate on the longs, man. They're good longs. So again, another good trade here. This one was interesting. So I remember seeing this when it tapped into this. We had the huge wick, we pushed, kind of started coming back up, and right now we're actually coming to fill this. And I think GA is, again, another interesting pair when pattern separated, because we can just basically see it as we're then pushing now as and expanding into that area. I don't love it, but I can see it. Do we have to tap into it? Not really. So I wouldn't FOMO into any positions and just try buy into it, because we can still leave a gap in here as well to getting into that point and come to the downside. Overall, I think if you look at how we're getting there, it doesn't look in the most sustainable way. It's just very much channeling into that area. It's giving sense of an ending structure as well. I think this could be a sign that we could be seeing some shorts come into place soon. So I'm going to be patient with this. I'm going to be looking for the short play. I want to see that when it comes through. So what I'm going to be doing is giving it a little bit more time. I want to see that it does whatever it has to do, taps in, maybe even pushes really much above, starts convincing people, and then it comes back in. And when we're back in these areas, I can really start evaluating. And maybe if I got a structure like this, I would really love to take a trade like that to the downside and then get involved on multiple areas within it. But again, it's one that requires a good level of patience. We can't be jumping into any old average trade because it's very easy to do. So we're going to wait patiently on this, but that's ultimately how I would be looking to take it. Again, it could fall into a time period where the market could be consolidating and not really giving a lot of good entries. So it will be something to really just wait on. Maybe an insurance entry there for sure, but even with the risk entry, call it around about 40 pips, just because we're so zoomed out. It's got huge potential for next year. lovely, absolutely stunning trade. So we'll see that. But yeah, GA definitely not going to go and watch right now. I'm not looking for a quick time short buy into the high. I'm going to be waiting for the bigger, better moves on this one. So give that one some more time. GBP CAD. Do you know what? GBP CAD was a underdog for me, man. I was looking at this for the long as well. It's just really DXY dependent, but I was looking at this. I think it was a very, very smart, intuitive sort of play. We saw this huge momentum pushing to the upside, so I was thinking, like, where are the bigger players really stepping into? And then I was kind of just deciphering this, and I was like, okay, cool, we've left a gap to the low there, so there is the possibility we go short. But then at the point where we started breaking above these areas, I was like, hang on a second, let me just measure that out. And then this was the real clue for me, is okay, we're hovering around that 50% region, so this is the turning point. We either go from here or we don't, and we'll get a clear message from the market some way. So then when I started seeing these sort of bases, I was like, hang on a second, okay, we kind of created a little bit of a base there. There's this, so we could come in and fill that, but more than likely, this looks solid. So then I looked at that a little bit closer, and I was like, okay, you know, it's a bit zoomed in right now. So I zoomed out, and then I looked at it like this, and I was like, interesting. So are we looking at this? And that's the expanding continuation to go to the downside, right? And remove that, and you're like, shit, that looks pretty good, right? If you isolate that and you look at it, come on, like. Then I was like, hang on a second, it's a little bit squeezed. It was a bit like the Swiss yen trade. Right, it was like, okay, let's wait for a third touch. So let's see how it develops. And then that happened. I was like, oh, maybe this is going to be strategically there. And then boom, that happened. At that point there, I was like, all right, that's coming back up, right? And I was like, why would it fail to commit in this area? That was the first thought I had. Why would it fail to commit? So then I looked at it on the 15. I just wanted to kind of see a little bit closer, and I was like, interesting. So what if it just comes in here, taps into that, and just drops off now? So let's wait and see. And it didn't. So then I was looking at it closer, and then I saw it, and then that's when I realized, actually, this is long. This is a long play. This is a higher time frame long play. But the only negative I had at the time was by the time I realized it was very close into news, and that was it. So it started going, and then I think at that point there it was just lost. It was a lost cause. And then I was thinking, like, shit, you know, the original trade thesis of the counter trend trade long here would have been the one for me, and I would have taken it based upon just intuition. But again, I would be going against a lot of structure and stuff, so it would have been a badass sort of thought process, to be honest, to go against everything. Could have been a quick in and out, but then that would have been the trade. So again, I would be running around about 10% on this trade here. I would have had to sit through a lot though, because at this point here we tapped into this area here, running about 3ish. I would have locked in about 1, so most likely I would have been taken out for the break, the 1% over here. And yeah, it is what it is. So then I would have just had to sit there. But then looking at that again, you know, it's one of those hard ones to really decipher, because then you've got this as well, where you could argue the point. That was a bit of news. I think that was, I don't know what type of news that was, but that was some news. Let's have a little quick look. Maybe it wasn't. But yeah, ultimately, it did go, so it is what it is. But there was no trade. There was no real easy trade to decipher on this one. You know, I think the constant bias of looking for shorts was there, and we would have hoped to see real commitment for it to come, but it didn't, and it went to the upside. And again, I think that's something that comes with trading a lot of the time, where you're at a value area, you really want to see the shorts come in, and it just doesn't. It just simply doesn't give you the shorts, and at the end of the day, you just have to accept it, and you can sit there. But the most important thing is that you kept your composure and you didn't act against what you truly know, because sometimes the market can force information on you and make you make decisions that don't really align with how you want to be trading. So that's there's so much importance within that alone, that seeing the trade in here looked good. It just didn't give us the ultimate entry that we needed in the end, but the thought process there was phenomenal, right? You look back on a trade like that and you know, if you had it on watch, you would have definitely been looking at it in the same way. You would have seen it tapped into here. How did it get there? It got there pretty correctively. It was squeezing. Then what happened? It broke the squeeze, created continuation, and then it fell through. Right? And you look back on the trade and you're like, wow, I should have been able to take that because that's just clear as day. So again, things like this happen, and that's why we have those trades on watch. But in this particular scenario, it didn't happen, and it doesn't mean that you're wrong, or well, you are wrong, but it doesn't mean that the trade was a bad idea or was not good to be looking at. It just means that in this particular scenario, something bigger was happening, and the bigger picture was there. The weekly is just showing that we're not ready to go for shorts just yet, and we are coming for that value area there. And I think the nice thing about it is now that we have that clear message from the market, let's just wait and see. There's two ways about this though. We either come up here and we do some craziness and we don't really follow through, and then the market just starts to come back down, and then we go. I don't think that's the gameplay. I think now we're just going to really make our move and go to the high value area above. So looking for clear, deliberate continuation. I think what we want to see now, let me just take that off. What we want to see now is just a real follow through, and I think continuation's just not looking very clean. But if we do get a clean one, yeah, you could take that into the next point there, and then just be aware that it could probably just keep moving, really and truly. Like, I don't think this is the place where it's just going to stop. It has no reason to just really stop here. It could just keep rallying up. So yeah, I'm looking at it like this now for the trade. I don't think we're going to be coming into these areas just yet. Eventually, yeah, but when you look at it, it's just a straight up move. So let's go. Let's see how that performs. GBP Swiss. I truly don't think GBP Swiss is a nice pair to trade right now, but I can see a trade in there. But let's have a quick look at the weekly again. Yeah, it's there, like, you know, it makes me think, like, where is it? It's in that messy range, crazy pullback, corrective cycle. I wouldn't be surprised if it did go to the bottom of this range, but then at the same time, I wouldn't be surprised if it just carried on ranging. So equally, yeah, you're trading in the middle of nothing, man. So forget that. Don't waste your time with this. Honestly, like, you could find a trade in there and you could make a little bit of money, but it's not worth the risk. It's not worth the time, the headache. You'll always be looking at that trade thinking, like, is it going to go up? Is it going to go down? This and that. Let's have a little look. So daily, I think we had a look at AJ, so it's quite similar. Let's have a little look. So we tapped into that area, we pushed away here, we're now creating continuation. We didn't tap into this, actually, we just missed it, which made me think, is this a trap? That was the first thing that said in my head. Is this potentially a trap? But then again, I know that it doesn't need to, right? It doesn't need to tap into it. But then again, like, structurally, it wasn't like the best trade in the world, so it is what it is. I'm not going to put a GJ on watch though. If the only thing that would really, and it's just the way the weekly closed as well, it just really makes you think about it. I think we'll get a clear message. I think if this just really starts to sell and does that and then pulls back, we'd wait to see how that responds to this. And if we get this and an insurance entry, good. But if I'm going to put a forecast on there, I'm not going to put that. I'm going to evolve this to just wait and see, is that going to be a part of an expanding, and then see that as it's one piece of its own. And I think that looks fucking sick. Separate that pattern. You've got one piece of its own, one piece of its own. You look at this, one piece of its own, one piece of its own, or yeah, that's a bit of a baseline there. Just descended into it, pushed away. Yeah, that's smart. That is a smart play, honestly. Like truly, I think loves this expandings. But yeah, I think that's it. If I'm going to be looking at something, I'm going to be waiting for that value area to be tapped into. I don't care. I'll wait for that, see that push through, see that continuation, get all over this, pass my assessment, whatever it is, get my payout, move on. Whatever your situation is, just know that there's a better entry around the corner. Don't settle for less. To know your worth. And I think this determines a lot for you, right? Had you waited for an entry like this instead of trying to get positioned in that, you may be better off. Like, yeah, sure, this could play out. This could be the trade. This could be the one that really just, you know, does this, does that, does that. Okay, great, I understand that. At that point there, you'd remove this and you just look at it, isolate that off as what it is, and be like, yeah, I accept the risk and I'll take this trade. Why? Because I have a 1, 2, 3, I have sections, it's squeezing, it looks really good. I'll play that through. How am I going to take it? Well, I don't want to just take it there because there's a lot of liquidity sitting here. Maybe there'll be a bit of a liquidity grab. Either I'll take it and I'll just add a bit extra in it and I'll go 30 something pips, whatever, or I'll go reduce risk and let it be. And then I know that when it goes into here, I might be running 0.5, so it's a risk I'll be willing to take. But if it follows through, then I've got a 3-to-1 to the low. If I go for the risk, which is more preferred for me because of the risk reward, but it comes with a risk, I can go in for about 35, 36. And then to the same low, I got about 8-to-3, but then I know into this low, I can manage at break even. Got 2-to-1. So even when it runs around about here, like 1.6, 1.8, I can move to break even. Just something I want to point out and just kind of say that, because at the end of the day, it's all about you. It's all about how you want to position yourself, what you want to look at, how you want to take your trades, where you want to be positioned in the market, all these variables. And once you catch that down, you'll be good to go. Now, a GU is nice. I think a GU looks really good, right? I'm going to zoom out on this one. You're going to see it on the weekly. Now, you can see here, weekly, tapped into this liquidity here, kind of retesting that, but there's nothing really significant about it. What I do like about this is, as an overall range play, it's not the best, honestly, right? It makes sense for this to go long. Equally, makes sense for the DXY to go short, but it may not be what we see. We might see the DXY come back to its value area, this then comes low, and then this goes high, right? These things can happen. We're in the middle of the range. Going back into the daily, looking at the daily, what was happening? Let's isolate this. So we've tapped into this value area. How have we come up? We've squeezed, right? We've squeezed with a 1, 2, 3, channeled. We've pushed out impulsively, broken that, committed, fulfilled, come down to these areas, and now we're creating continuation. I go down into the 4-hour and I look at this and I look, okay, fine. There is this area where we could have just come up and just wicked and tapped into this as well, which I was conscious about. But more importantly, what I wanted to see is, how do we respond to this little bit of liquidity here? Price has come up, it's tapped in, took out this, left a gap, eventually filled it, and now pushed back in with momentum. Is that signifying to me that bigger players are stepping in? Potentially. Is the daily bearish? Yes. Is the weekly? Well, the weekly is a little bit indecisive. So there is the potential that we kind of come a bit higher before we go short, but it's not completely necessary. Looking at the weekly, still premature. We're at the beginning of the month, so that's irrelevant. So I'll go to the 4-hour because we've established everything else. In terms of signal, we've tapped into it, we've broken above, that's fine. We've pushed back in, taking out all the orders, that's great. Then I look at it on the 1-hour. What am I looking for naturally? I'm looking for 1-hour continuation. Where am I looking for it? I'm looking for below here. So if I just mark that on, right, technically just below these areas, I want to see something through or below. So if I go to the 15 just to refine that a little bit further, I can see that, yep, this is through, it's broken the low, that's great. There's this point, which I don't think that is the point that I'm going to be too concerned about. I want to see this point here as the area where I'm seeing continuation, but if I can, I'll mitigate against that. So I want to see if this comes in low and then we come back up for whatever reason, and then we do something like this and then we sell, right? And then this becomes the overall area here and it becomes something like that. But then even if I can get the entry in here, there's two ways I'm going to look at it. I can either get in with 10, which I think is more than enough and perfect, but if I wanted to go in for the extra protection, I'd go in 20, right? And I'll just see how that plays. Now, obviously, for obvious reasons, we don't know what sort of price action we're going to be dealing with. If the entry's there, the entry's there. If it's not, it's not. We understand, but I don't see it having any reason to really come up to that point unless it starts developing structure into that area, and then you see something significantly different, which is basically like this. And then you saw something like that. Again, it's one of those ones, and then you'd have to kind of just see it as something like this, like that. Probably take an insurance entry in that as well. The thing is, this is not invalid. Reason being why I would still consider that trade is because when I still measure it off and I look at it, it's still below 50%. So it kind of just gives me that signified that we're good to go for short still, regardless. We're in short territory, so it's nice. So I think the nice thing about it is any continuations in these areas are perfect right now. So I'll be waiting patiently on this one to just kind of see how it develops. But more than likely, I like this a lot. So I'm going to wait and see. We'll see how that plays. More than likely, though, this could just be a bit more corrective because of the morning. So it could be, yeah, it could be a London session trade, to be fair. But even so, it could turn into a New York session trade and just go like that equally. So yeah, just bear that in mind that you could see a 3, most likely a 2, but a 3 could still be better. If you get something like that, phenomenal. I'll definitely have that one on watch. Let's go back to GJ. Yeah, I'm not going to put GJ on. Maybe I will. I'll have a little look at it. But like I said, there's much better pairs on watch than GJ. Yeah. GN. Again, I think GN is similar to EN in the sense that if we get continuation and go, if I look at this structurally and I pull it on the 4, yeah, I can see it. Perfect, isn't it? It's just so nice when you can actually read the price action immediately. You know what to look for, you know where you're going to be placing your line. So before you've even done it, you can see it. It's really clean, really nice. I love it. I love it. Absolutely love it. So yeah, if you get further continuation, you can probably take that. I mean, you know, powering them up, if you're going to put GN, I would put EN side by side and just measure them both and see which one you're going to go for. Preferably, I think it really depends. I think EN looks nicer because you have this. You know what? I would actually want EN and GN on watch now. Now that I'm seeing it compared to everything else we have on watch, it's not a bad shout. EN, preferably. Then GN. GN looks good, but GN is at that value area. You know what? I'll look at them both again. But EN, GN both look good for continuations to go. I mean, if I just zoom out on the EN, GN, you'll just see it again. You can see we have a clear value area there that we're going to, which is highly probable. Most likely we're going to break above it as well. So I think the nice thing is you get involved in that, you know that you're going to be seeing some sort of washout on that. So then it starts forcing your hand where you start drawing on this, you start drawing things like this, and then people just overdo it. But yeah, it's nice. It's really nice. It's really, really nice. EuroCAD. All right. I would say leave EuroCAD alone, but the only difference is you can see phase 1, phase 2, phase 3. It's in a corrective channel to the downside, which, again, if I just invert this for a second, you can see that it's not our most preferred area of interest, but invert that back. But I can see something developing here. If you get that, you could take that short. Yeah, I don't know, man. It's one of them preference. This is going to be middle section territory right now. And that would be it. That would literally be the gameplay right there. Insurance entry on this right here, and you'd see that be a bang trade to the downside. Do you know what the thing is though? Look at the trading environment though, because it's correct if you just don't know what type of fire you might be playing with on this one. But hey, at the end of the day, the trade's there. You know, you get this. You'd see it more as an override in my opinion, but there's a potential for that 1, 2, 3, and that would be it, and then you get the gameplay to the downside. So that's how I'll be looking to take that trade. New Zealand Swiss, I think ultimately it's just not in the area that I need it to be right now. I think again it's one of them ones looking for shorts. If you're going to take a trade on this for whatever reason, definitely be looking for the short. I would be waiting for continuation in some way, but you can see it's not always the cleanest. But if you did get something like that, I don't see why you wouldn't want to hesitate on it. I just haven't seen a lot of continuations like this yet in this run, but if you got something like that and you wanted to take it, fine, fair enough. I think that's actually a decent trade. You can even go extra protection if you want to, 15, 17, just so you're covering above any sort of variability. But if you wanted to go 10, go 10, and then you can trade it. When I say into that low, you can probably move to break even, or yeah, into that low, move to break even, or even at 1%. Probably not 1% actually. I'd probably wait till you break this low, so around about 1.8-ish. I move to break even. Don't know what spreads are going to be like, but you see it, and then that could turn into a decent trade, to just continue moving to the downside to ultimately get to these areas where it could turn into a really good trade. So again, another instrument where you could see momentum follow through and just a huge percentage being made in a very short spell of time. So just something that I wanted to really just point out, that you know, it's not the most typical pair, but even if you did get something, there could be a very, very strategical play in there where you could make some decent percentage, but then at the same time, you could be forcing the market at the same time, just trying to get something very small, and it's not really there. I mean, you're better off, would have been better off waiting for this trade here, truly. And the positioning on that was stunning, right? So you'd see it here, you'd have it in here, and then you would have got it in there. Had you taken it 4-hour entry for whatever reason, you could have taken it in that, and you'd be in there. Now you'd be running around about 6. But again, you know, that's not always the case. I mean, even in there, I think I can actually see another trade here. Oh man, there's loads of trades. Like, you know, I've not really been, you know, I had Swiss pairs on watch and then I took them off. I think, yeah, there's abundance, man. Like, sequence has been pretty decent actually. Once this higher time frame structure committed, I can see a lot of entries shaping up there. I mean, it's not been the most messiest, but you can piece the puzzle together. Definitely might consider a Swiss pair this week. New Zealand US dollar. So this one's really nice actually. So we had this, tapped into that area, we pushed down correctively, came in, keep running channel, respected the running channel, and then we moved to the downside. It's funny because up until this 1, 2, 3, I was looking at the running channel there. Same time I looked at the Aussie US dollar trade, and then I think there was news that came out, tapped in, took a break even, and then it just extended, tapped into these areas, and then rejected. Again, it is what it is, man. These things happen. I mean, at the end of the day, I could have taken a 4-hour entry on it. I just wasn't looking for a 4-hour refinement entry on a running channel in particular, but something that I did observe, and it's something that maybe I might go and collect on data for the future, and just observe on running channels. But Again, just something small observation. See nothing by it, but just pretty cool. So moving to the downside now. So overall, not really worried about this being a crazy sort of type of channel or nothing, but yeah, ultimately we're still in that sort of run. So it looks good. It's okay. It's just one trade under the belt. If you are going to take a trade, just to kind of just outline it right now, you'd basically have that as your line in the sand. And then equally, as we're seeing a lot of these Euro pairs, DXY related pairs, you might see something like this. And then you get something like that and it goes. And then, you'd basically see it as an A. So we pretty much mark it up like this, and then yeah, as I was saying, we'll see it as an A to B movement really. I don't think that's the one though. I think I'd give it a little bit more time. I think I would want to see it kind of just really develop into something, but that's my personal want. I think the truth is we'd go refined, we'd go to the one, and we'd see it more as a more refined entry over here. So most likely would see something like this, and then we'd see it like that. And I think that's the highly probable outlook for this, is that we'll see something like that, and then within there'd be the entries. I'd probably go a bit extra personally, but you don't need to. And then if I can manage into the low there, which I can, great. And then I can manage into these, and I've got about 4-1 into the low there. And then with how the DXY is looking, if it continues, great. I'm positioned really well. And then you look at the higher time frame and you think about it, it's like I was focusing here, when in truly we have a huge run ahead of us. You probably wouldn't hold that position all the way, but who knows? It's one of those ones. So just want to kind of point out as well, is like we're not just looking at that as the base, we're looking at this as a potential way that we could move towards. But most likely we need to be conscious as well. We need to be conscious that we have CPI next week as well. So the fact of the matter is, because CPI is coming out, we may even see this follow through, tap into this, and then see huge sort of pullback into these areas. And then next thing you know is like we have this larger flag, which then continues to go. So then it just becomes this sort of expanding into the downside as well as a continuation variable, or we move to the upside. Again, we're not here to care much about which way the market's going to go on CPI. Let's let CPI play out and then let it go. I don't think holding a particular USD directly related pair very close to CPI is good, unless if the trade is all the way down here and daily looks good, everything looks bearish, and then CPI comes out, you could have stops here, and then fair enough. Like if you were willing to be running 7% and you were happy to walk away with 5, if it pulled back, great, do that, right? Understanding that with CPI it could just drop off, right? It does something like that, and then the 5% you were happy to walk away with, sacrificing it from 7ish, 8ish, whatever it was, turns into like 16. I don't see anything wrong with that personally. It's just sometimes I see it better as you're thinking that you're going to take 5, it's running around about 7, CPI comes out, pushes up here, you were running 7, you ended up taking 2. Were you in a position to take 2, or were you in a position to take 7, and which would you be better off with? And it comes down to a lot of those. But me personally, I would be happy to do the 7 to 5 trade, understanding that it could turn into 2, because I have the skill. I have the skill to know that, hey, if it doesn't work out, I'm going to get on to the next one and move forward. But at the end of the day, it comes down to the individual. Like if it's difficult, if you find it still quite difficult to find that consistency and get to those points where you can get to the 10% trades and stuff, then I get it. Get out for the 7, right? Get a clean cut, get in position later. It doesn't matter. Even if it ran for another like 6% and you could have made another extra 6% by just leaving a trade open, it's the same way that you could have lost an extra 6% and walked away with a break even or actually a loss. So understand those variables. NJ is nice. NJ is nice, but again, it's one of them ones. I'm just going to remove all of these lines here, and we can see it here simply for what it is. So tapped into that value area, when it loads, tapped into this value area, we pushed away, and it did look a bit okay for continuation, but again, at the end of the day, it's not my nicest trade. What I do like about this, actually, when I did look at it, was it's kind of doing that now, and if it eventually actually came up and did this, I would like that. But the only problem is borderline, it's through that 50%, so insurance entry. But yeah, there's pros and cons to this trade. I just want to see it sell off, really. So anyway, looking at the sells right now, obviously understanding that they could be short-winded, they may not go for that long. I will be looking at a trade like this, and then potentially into next week we actually go long instead of short, and then we go in here and then we sell. Insurance entry there for sure would be nice as well, and then we short and we get into those areas. So I'm just going to mark it on as a risk entry just for simplicity reasons, and then we basically put it up here, we see it, and this is probably how I would prefer to take it anyway, but it just depends on the internal makeup, loads of little factors within there, and I'd like to see that come in and play into these areas, and I look at it as a four-ish. But really and truly, you wait for that insurance entry, right, and it comes in here, gives you that nice little trade there, you get that refined, and you go 15. Forget the risk entry at that point, you've gone in to a 12-ish% trade. Come on, tell me which one you'd rather go for. So be patient, wait for the better entry, and that's probably going to be the more rewarding one, I'll be honest with you. So I'm just going to kind of point that out there. This could just continue selling off. If you get continuation and it sells off, it's what it is. Would I say take a trade there? Absolutely not. I'd say don't wait for something so tight and small there. It's not worth it, man. It's a trap. Let that be what it needs to be. Let it tap into the value area and then see over here. I felt like that rhymed. But yeah, use USD CAD as well. USD CAD is pretty good. What I do like about USD CAD is that the US dollar basket is moving to the upside, and then equally we just got that push. What I do like about this is that we had this ascend, and then we had the expanding, and then within that expanding we were looking at the shorts, but we always understood that we could still go long. So with that variability of that going long, where could we be going is the next question. And as I see price break above these areas and really not see the bigger players stepping in for shorts right now, I just need to be patient. Now, I understand one thing, right? This could be a part of a trap where price does push higher and then it comes back in eventually, and then we see the shorts in play, right? That is completely a valid thought process if you did have it. But also at the same time, there's too much shit going on here. I'll be honest with you. There's a lot of crap going on in this area right now that we don't need to be wasting our time at all. What we need to see is clear follow through. If you're looking for shorts, good. Waiting for price to come down here, clearing a lot of that price action gives us clear continuation, and we're in for a banger, right? That's literally how I'm looking at it. But the truth behold is we don't have that right now. Right now what we're seeing is price is just rallying to the upside with the DXY. Price is respecting this, expanding. Not the cleanest. It is what it is, and it's going to the upside. I just need to wait and see now. So USD CAD's not going to be on watch for me, but if you did have it on watch, this is exactly how you would want to be taking it, right? So what you want to be doing is you want to be looking for continuation. You want to be waiting for price to create a base, and it does something like that, then it goes, right? However much it does it, you don't want to take it too short. You don't want to take these very small ones. I know that sometimes they do play out and you get stuff like this, and if you got something like that, fine. But at the same time, just understand that if you did take something like that and it did pull back and it did something like this, or even if we did have that momentum turnaround, like the DXY, for example, let's say it pushed up and then the momentum kicked in and we actually started going short, you don't want to get caught into some bullshit where you don't have confirmed structure. So wait for it. And also cross correlated with the DXY, not directly. You're not trading DXY in correlation with US dollar CAD directly, but you're looking at it to see that is it dominantly going long, and if it is, most likely we're going to see USD CAD go with it, and that's how I would be looking to play USD CAD. Likewise, USD Swiss has potential, but at the same time isn't the best right now. I do like how the weekly is though. So what we can see here is that there is a bit of a gap to the downside, so it does show that there's potential for the short. But what we can see is that the weekly momentum is in play and we are moving to the upside, but we're ranging. So when I look at it on the daily, I'm like, how is this really moving? What's it done? And truthfully, I think it's underdeveloped. I think two ways. Either this is now going to start turning around, but most likely not, or we're going to just literally start plummeting to the upside. So you're going to see something like this where price maybe even just starts messing about and then suddenly it's up here, you get continuation, and then boom, it's moving, and then next thing you know it's all the way up here, and then you draw something like this on and you'd be like, ah, I see, that kind of makes sense now. And then you're like, how did I not see that? Well, truth behold is it's not cleanest. You know, it's not very easy for you to see, and I think that's more for a reason why it's a nice sort of trade thesis. Is sometimes it's the ones that are not easy to decipher that are the best ones to be traded. So seeing something like that would be really cool, and seeing that go to the upside, and then we see that as an expanding, and then you see it as trading into that area there, that suddenly then becomes a little bit more valuable. Just the thought process, this isn't exactly how it's probably going to play. We don't know for sure. Obviously, you know, we are looking at something like this ultimately right now. Again, this is not the one that fits for me. I like the expanding idea a lot more. I like the idea of this going long right now. I just need to wait and see how that plays out. So see it as an expanding. I'm seeing it as a long continuation. I'm seeing it as we're positioned really well for Swiss pairs in a whole, but US dollar as well equally for the longs, US CAD for the longs, and then UJ. So if we're looking at yen shorts, then why would UJ be going long with the DXY? Well, that makes sense. But then when I looked at the JP225 and I really started thinking about the neutrality on a lot of these yen pairs, that's when it kind of just hit me, and I was like, hang on a second, it might be a little bit too soon for me to be doing it. As I originally forecasted last week, I was looking at the long for it to, I mean, not long, sorry, for the larger flag. So I understood the thought process behind this actually is solid. This then comes up, taps into this area to then come short, giving an insurance entry to then go short. Boom, that's solid. That, honestly, that's great. That's a great trade idea. However, we have to wait and see. We can't just be jumping to see. I mean, this could still go long. We need to see about the DXY, but I do like this a lot. I just think it might be corrective. I think with the DXY going long and the JP225 being within this overall corrective channel, let's wait and see what happens. But that's why I think when you look at a lot of these, I'm going to put that on watch. When you look at a lot of these pairs, there's a lot of potential. There's a huge amount of potential. See, that could go long before it goes short. That could go long before it goes short. This could go short, but at the same time, as we said, that could be a trap. And then this then does that, and it goes long before it goes short, right? And then you can piece that puzzle together. This is the nice thing about it. When you really start to analyze everything and you put them together, this is why trading one pair is not good. This is my personal opinion on the whole concept of trading one pair. And I think, you know, I know there's a lot of speculation, like, you know, you don't learn a lot, you sit in the market, you force trades, this and that, and that's all true as well. But I think the fact of the matter is, you can see throughout this whole breakdown that how analyzing one pair didn't do the pair full justice, but then why cross-correlating it with the other related pairs enabled me to then come up with a better trade thesis, which then enabled me to go with the most probable scenario to then keep me out of a lower quality position. Just wanted to kind of point that out. It's just something that I think was extremely important that I've been doing subconsciously that has enabled me to move forward and actually become even more consistent over time. But it came from actually just putting in the grind, man, putting in the grind. DXY, again, just a minute to appreciate where we are in history, and historically this is nice. Historically, come on DXY, show us what you got. I think that's something else, man, honestly. I don't know though. I think we're going long to go short. I think that's what it is. I'm going with the head and shoulders thesis still. I'm true to the forecast. I like it. Let me go to the 1 hour. Don't want to force anything, but yeah, I'm true with this forecast. The only thing is though, I would like to see it break that high, so we'll have to wait and see. But ultimately, as a head and shoulders thesis, let's have a little measure. Right, so if we measure from A to B, and then we measure it from the break of the neckline, comes into that level there. That could be good. Anyway, I'll come back and watch this video myself and just kind of see how that plays after. It's beautiful. There's some old videos that I have where, you know, I remember myself making a trade thesis and then seeing myself be correct weeks later. Obviously, I anticipated a lot sooner for whatever reasons, or sometimes I was bang on correct, sometimes I was extremely wrong, but a lot of the time when I was right, when I come back and look at it, it's such a nice feeling. And I think this is one of the nice things about logging your data and just seeing yourself grow, because it's time where I was extremely wrong every single week on week. I used to just get it so wrong, but now it's completely flipped. And it's a complete different shift and feeling in the way you observe and you see things, and you're able to anticipate trade and price action. It's very, very nice. Anyway, JP225, as you can see, I'll just stick on the 4 for a minute. You can see that it's just within this range as corrective. You know, baseline could be here, just right there. So I would keep a mindful eye on that. I think what would be nice is to see the JP225 respond and go long, and then ultimately, you know, you'd see this as some sort of channel into that way, like that, and you'd be able to kind of decipher that, and then you'd see it. But I think at that point there, you're probably just looking at the longs, mate. Like, forget it, forget looking at the shorts at that point there. See it as a long. I think if we tapped into that low and we went long, it's even better, but we didn't. We created a base just below it. Fine, we'll tap into that and eventually we'll come short. It's all good. We just need to now wait for the JP225 to shape up, and I think while it does that, we're going to see the other yen related pairs sell. Maybe not the best way possible, but we'll see them sell during this corrective channel on the way back down to that base, and then we might see the yen pairs gear up, appreciate, and get super long again. So that's something to look forward to for next year. SPX, you know what? Don't waste your time. Don't absolutely waste your time with this shit. It's not even ready, man. Like, you want to wait for this dips. Oops. You want to... Let's get rid of that. You want to wait for this to just drop, do its thing, come to these areas, whatever, and then it starts pulling back. It's hard sometimes to trade. You can see here, like, in terms of the nature of this, you can see like massive drip off. You know, how difficult would that have been to really get involved in? And by the time the trades got a little bit more cleaner, they were on the smaller time frames and they were breaking the highs, they were all-time highs and stuff. And you know, that's the thing at the end of the day, where you have to get really good at some point to trade these particular type of pairs, study them, sit there, observe them. And I've been looking at them every single week for the past year. So you think about the experience and the knowledge that I'm gaining from just doing that alone, from monitoring 1 or 2, 3 pairs every single day, every single week, right? Like, I'm noticing different small intricacy patterns that are now enabling me to be even better, and I want you to kind of observe that for yourselves. Just understand that soon the S&P 500 is going to drop, right? For whatever reason. I have no clue what the reason is going to be, but it's just going to drop and it's going to dip, and then I don't know how far it's going to go. I don't think it's going to go that far. I think we're going to see a quick dip and a quick recovery, and it's going to be back up there in no time. So that's why I'm saying, like, just leave the S&P 500 alone. If you're going to be getting involved in it, what you want to really be waiting for is at some point price just does that, does this, it's all like around here, and then one day, boom, price just suddenly drops, comes all the way down here. If we get back to around about these numbers, around about the 5,000-ish numbers, right, you arguably you're in a very, very good territory. I think for long-term holdings, you'd want to like put in a lot of money, not CFDs. You would want to put into bonds and things like that, long-term holds on things like this, right? S&P 500 around about this price. If we did, I don't think it's common for the S&P 500 to just do a drop like that. If we did, for whatever reason, have like some economical crisis, some crazy stuff happened, it'd be pretty bad. I mean, this is probably on the brink of a world war. If we're in a world war, we'll probably see some sort of slow but long, sharp drip into this area, and we just drop off. And I think if we did get like a 2,000-3,000, almost certain to the point that you would want to take out as much money as possible and literally get involved, man. But you don't want to, like I said, you don't want to be sizing in on CFDs where you have to get into positions like this where you have stop losses and stuff. You want to get into like, I'm literally secured at a price, and if price is above it, I have money. If price is below it, I'm in a loss. And that's literally how you see it. The odds of the S&P 500 going back down here is very close to zero, right? It's like a 1% chance at this point. But the price getting like to these levels, it's possible. It just requires a war or something insane, right? Something that right now I couldn't really think of, but we'll have to wait and see. So housing market crisis, whatever, you know, even so, when we saw previous drops in the market, and this was over a short period of time, right? We saw the price drop that much. So if we see the price drop that much again, it's almost 50% of the market value that it's dropping for. If it drops for 50% of its market value, that's insane. I mean, look here, we're at 3,000. It dropped to around about 2,000. So, I mean, that was the biggest dip during COVID. Again, maybe another pandemic is what's going to cause it. We don't know. But just understand that right now we're in that rally stage. And look at how this rallies, man. This just goes. Right now, same. I'll remove all that now. I don't need it. The daily, I mean, you guys can see what that was actually. Why not? Just go back. I mean, I had it on here for a while, to be fair. So I was just studying some price action on here. Oh, actually, no, I can't. I'll be leaking some stuff. So really and truly, you'd have to study it yourself when you join the community. But anyway, over here we have price action moving, expanding, pushing up. Yeah, just there's nothing there, man. Like same as the S&P 500, man. It's just a very difficult situation if you're just taking random trades. So right now we're breaking to the high. It is what it is. The US 30 though was an interesting one. I think the only negative there was that we had some news, but I saw this where we kind of tapped into this area and we create this small continuation. I was looking at that and I was like, that could be a strategic A to B movement. If we got retrace in there, we could then get involved here. We could trade that into there for a 3-to-1, and then we play it to fill the gap over here, about 7-to-1. And that's how I was really looking at it. But unfortunately, we had news. It pushed up higher. We didn't get any trades, so it is what it is. But that was the thought process on that. Aussie 200. Wow, that one slipped the net. I've been looking at Aussie 200 quite a lot as well, so that's very interesting to see. Oh man, lovely, absolutely stunning, shit. Yeah, now the game's starting for the, let's see that. So I want to see this drop. I want to see it get through here. I want to see some continuation. I want to get involved. Let's wait and see. If we get a follow through next week, that could be a good one to be having on watch. Let's have a little look. Got this. Oh man, that was nice. We're not even far from the current price action there as well. But the only thing is it kind of broke it. Nah, I don't know. I feel like it's a little bit forced. I'm going to wait for it. I'll definitely go with my line in the sand there. Continuation below. That's it, done. Although, you know, I was eyeing up this for a second. I was thinking like, but then I just realized like, It's not the best of environments anyway. Like, what am I trading? You've got this, you've got that. Like, if that went up, I wouldn't be surprised, and then I'd be pretty upset with that. So ultimately, yeah, it's looking okay. Continuation to the downside, yeah, for sure. If you want to go super aggressive, like, by all means, whatever, but push down there could be the one. DAX, not going to touch it. I'm going to wait for the S&P to turn around as well, so I want to see this kind of gearing up with it. Phenomenal though. I was looking at longs in here, but I missed that one. It's nice to see it's all the way up there. I was looking at something like that. Yeah, I mean, that would have been about 10 days, 10%, 10 days. Interesting though. About percent a day move. UK 100. I know a lot of these pairs don't have anything going on for it, but the banger right there. That's the one I'm going to go through in a second. Nothing interesting. We had the bit of expanding. I was seeing to see if there would be continuation, but we didn't get it. I still think that there's the possibility that if next week, for whatever reason, it retraces and it comes back in, right, just suddenly just comes back down here, and then you get continuation, I wouldn't hesitate on that as well. I think that would be a solid trade to actually just continue to the downside. I think what it's done is it's created the 1, 2, 3. It's pushed out, pushed straight back in, created continuation, and now it's following through. And then you look at it from the daily, you can see here that, you know, we've had the 2 touch. This is within a corrective channel. This actually moved there because it's a part of this running channel. So again, I just wanted to kind of point that out. That's why I think it's a good trade, is because it kind of comes in with the whole running channel thesis of corrective channel, 1, 2, 3, taps in, wicks out, convinces people to be on the long, then it rejects, goes in for the short. It's just such a strategic, smart play. You know, I think if you're zooming in though and looking for a trade up here, I think that's very risky, because I could be completely wrong. Like, truly, I could be very, very wrong on this, and you don't want to be playing with fire in these situations, man. Just be cool. Play it really cool. Wait for that. Honestly, this looks so good. Like, there's a gap to the low there. You could see a really clear run A to B. You get positioned on something like this. You know, stop protection's decent as well. I could go 40 just for the extra protection if I wanted it, didn't need it. And I'd trade it into that low. I got 4 to 1, 5 to 1 that was, and 6. But then ultimately, you know, you got the move down here as well, and then you zoom out, and I'm not saying that we're going to be moving that way, but you know, there's a lot of room for this to really move. 11 to 1 as well, so this could turn into a really decent trade. It's just requires a good level of patience to it, so we'll see how that goes. Now it's good, getting butterflies in my stomach right now. I love the HK40, HK50 right now. I think on the weekly, what's nice about it, we can see that in terms of a corrective move to the downside, it's there, right? It's been doing this, and it's that. Now, I want to break this down in a very, very simple and easy way. What we can see here is that price broke this low, but left a bit of a clue here, right? A little hook point, spiked up, came up, did that, and then dropped off, and that was the origin. As an origin came up, it came in and tapped it correctly, moved away, left a gap. As it left a gap, it came up with a 1, 2, 3, right? So when you measure the 1, 2, 3, you can see that move phase 1 is equals to phase 3, right? So you look at it from the break, give or take, it's there, it's in that region. Okay, good. Then I want to see something about this. How are we getting there? Well, we're getting there structurally. Awesome. So I look at it a bit closer and I zoom in. This is the weekly, remember. So I look at it on the weekly, and then I can see that, okay, we have a 1, 2, 3, price then wicked through, tapped into liquidity, retraced more than 50%, pushed down, continuation, and it's going. So what does it make sense to do right now? It makes sense to look for sells. Okay, good. Because why? Because we're responding from the value area. Okay, can go into the daily now, so I'll just remove that off. We understand what's happening in this section here, we understand the structure, so I'm not going to put that on, we don't need to see it. Go into the daily. As we see it on the daily, we understood the structure, now we understood everything up until this point, so we can then isolate this off on its individual section. What did we see here? So price left a small reference point there, but then ultimately price was correcting sideways. Okay, great. So as price was correcting sideways, then we can actually decipher this a little bit more, and we can see that price created a base. Okay, interesting. Within this whole section here, we want to get in a little bit more granular. We can see it on the daily, but most likely on the daily it's not giving us enough justice. We want to refine it a little bit further. As we go into detail on the 4 hour, we can then see that price is actually creating a bit of structure within it internally. However, the only thing that we didn't see about it was that price didn't tap into that value area above. So arguably we could have been looking at it like this to potentially go long. However, that would be, and then yeah, so sorry about that, the video cut off for a second, but ultimately what we're looking at is we'd see it as a structure like this, where if you zoom out again, you'd see it as, you know, we understand the bigger picture. Remember, we know where price is coming from, we know what's likely, we know what the probabilities are and how things are going to be responding. That's why we can take advantage of these situations. So it doesn't mean that the expanding was wrong, it just means that we had to kind of shift our understanding to understand that there's something else which is in play here. And as we know with expandings, is they can also work as continuations or reversals, and I think that's something which is major to understand. So at this point here, obviously we wouldn't have taken the risk entry ideally at that point, but we can understand what's happening in this region, and we then responded from this, and we don't have to look at it as for what it was. We can just see it as, you know, that was one piece of its own, and then price did this, and then when it responded like that, we can now see that this is the banger. So just in terms of a level of pattern separation, quickly, I'm just going to separate this. We have this as the 1 2 3 up here, we have this as your 1 2 sort of 3 extended, and then it comes in here. That's your small of liquidity. This would be your sort of section in there as well. So like I said, there's layers to this. It's just a very complex sort of messy structure internally, but the trade is there, and then internally in here you have a little bit of your liquidity before it breaks out. And then what does it do? It leaves a small reference point. Now the thing about this is there's two ways we're looking at this. We're either looking at it from here or from here. I think the odds are, the fact of the matter is, we don't need to come all the way up here. So what I'm really looking at is that if we don't sell off from here for whatever reason, we would then see it as a retest to potentially continue its channel. But the beauty about this is that, and I'm just going to draw this on for a second, right? Let me go to the 1 hour. Right, now it doesn't really matter how you draw this on, right? It's all pretty much relevant, but ultimately what we can see is that we have come in with a bit of structure to it, right? If you look at it like this, or you look at it like that, it's all relative, okay? It doesn't really matter as much in the sense that, you know, it is what it is anyway. So I would then group this down here, keep it like that, and see it as an A to B range. How would I be looking to take this? Well, to be honest, there's two ways, right? Because we need to always zoom out to the higher time frame and look at what's actually really happening, and we can see that we are in a run to the downside. So does a 2-touch make sense in this area? Yes, it does. Does a 3-touch make sense? Absolutely. But what really makes sense is, let's look at the psychology of this overall flag. If we're looking at a 2-touch, we usually tend to look for something like a structured approach into it, and we have got that. So in this area here, it does make me think that this technically could be more than enough. Now, when I see it from a 4-hour perspective, I can see that we hovered in this area and had multiple rejections in this area before we actually really started committing. We can see it on the daily where we did have a bit of a wick, but what did the wick do? And I think that's more important. And you know, when you look at it like this, you can see that the wick actually ultimately just wicked through this area and then retraced. And if price did kind of just hover a little bit below this and continued going, I wouldn't be surprised, because what was interesting is that when you really look at it, the value was all sitting in this area here, right? And I'll remove this for a second. The value was sitting in this whole area here, but then we had a little bit of liquidity sitting just above. So the likelihood is everyone had their stops just above that. So what happened was all these people that were getting positioned in all these areas were most likely just like, well, let's put our stops here. So we're above that little piece of liquidity. What happened? Price came up, tapped in, took them out, and then it's now made its decision. Now, this doesn't necessarily mean that we're completely ready to go, because what we can see is potentially something like this, where price does end up continuing, and then it does go a little bit higher, and then it sells. But I don't think that's the possibility right now. I think what we're actually really looking at is a short play. Without overthinking it, we're keeping it very simple. We're seeing it in terms of a pattern separation. Phase 1, phase 2, phase 3, but it's correction into a correction, but we do have the separation of this impulse. So when I measure that out and I take it, and let's say I put it to the bottom, where does it lead us? Well, it leads us into this very obvious target down here, which is nice. I mean, obviously that's the absolute, but even into the middle sections down here, this is good. So we do have a pretty large run ahead of us, which means that if we are taking a position and we're positioning ourselves accordingly, we could still get positioned in really well. Even if we were to take our entries in here, just saying as a trade idea, and you were to get your stop loss above here, it's pretty large. Yeah, I agree, right? And then you look at this and you're like, yeah, for a 2.5 to 1, it's not really worth it. Maybe I'll go for a 1.88. Well, that's where you go wrong. That's where the market starts to then really do this, takes you out, and then sells off. So what you really want to be doing is you want to be patient with this. You want to be waiting for something like an insurance entry. It may not come. It is what it is. But you get something like that, you get involved. Right? You get something like that, you get involved. Right? And so forth. And then you can just keep playing them runs. The thing is, at the end of the day, is a lot of people I can understand, like you see something like this and you're like, oh shit, I didn't see it on the day, this and that, I missed it. It looked perfect. There was a 1, 2, 3 there. You know what? Market open, I'm going to FOMO and I'm just going to take a trade. Or let's say market starts to pull back, right? Market starts to pull back and it's up here. And you're thinking like, oh shit, I'm in that area. You know what? Let me take that and I'll cover my stops like here. The likelihood is you're not the only one doing that. And a lot of people will, and then what will happen is price will do that, come up here and sell, and then what it was actually doing is it was coming to retest this whole area here, and that's, you got taken out again. Price didn't really do anything different. Why? Because it was still within this channel, and then it sold off. And then when you zoom out on the daily and you look at it, it didn't actually look too bad. And then when you look at it again, right, I'm just gonna do this. This is just a variational way of thinking, and I just want to point out is then you start taking this, you start doing that, and then what happens is this actually ends up becoming some larger corrective channel that took its time, that did that, and then it was large, and then it went into a correction, and it just became a corrective channel to the downside. Again, this could develop into a 3-touch. It could do a lot of things in these areas, but like I said, you don't want to be overthinking it. You want to just trade what you have. And if you just separate all of this and you look at it in a very simple way, that's the variability, but this is where we are. So now the 4 hours in, just wait. Just literally wait for it to push a little bit further. If it does, pulls back, does something like that, you get involved. And take the risk. If you get tagged out, you get tagged out. If you want to go for a larger stop, go larger stop. But at the end of the day, you could probably get involved here. Call it about 60 pips if you really wanted to. If you wanted to go extra protection, you can go about 120, 100 if you want to. And to the low of this flag, you're still playing a 7 to 1. Spreads can get pretty large on this pair as well. So the 121 would be the probably 112 would be the better stop loss for me. But you know, it is what it is. But Mondays, we can see that sometimes on Mondays, that's when the momentum really kicks in. The start of the week, the market's really made a decision up and it knows where it's going. Look at this trade here. This was actually on a Monday. Oh no, it was on a Friday actually. But then on the Monday, we had the follow through. I think up here, we had it on a Monday. That drop was started on a Monday as well. Committed on the Tuesday, but you know, it's starting to make its decision up. Again, we might see the same thing happening over here that we saw in these areas. So Friday, Monday, usually a good time. It's just a set off for the week, especially when it's ready. So something I'll just keep an eye on, because I know I've kind of went over this quite a bit, but I think psychologically, it's a really interesting one, especially from a mechanical perspective. You can see that what's happening. Price took out this high, came up, took out that high, sold off, made the idea that we would commit under here, failed to commit. You can see why as well. There was a base, didn't commit with two bottoms as well, just trickled, and then impulsively pushed up, and then price was eventually up here, tapped into the value, and now it's selling off. And you know, who actually made money in this area? Well, not the people who were looking at these areas. It was the people who understood that, you know, price needs time. Price is in a channel right now, and it needs time to develop. And then now it's completed. It's a 1, 2, 3. It's got structure. It's there. Now let me wait for the bigger players to really step in, because really and truly, that's this 4 hours not the bigger players stepping in just yet. We want to see a follow through, and the real follow through is that bigger players have stepped in and prices like down here, and then you've got your continuation just there. Honestly, like, you've got a clear message from the market, and you've got a nice A to B move. You've got A to B here, and then you've got B to C from the break, and it's just bringing you back into those areas where you might get next continuation, which you're aware of at that point, where you could see something like that, and then it commits, and then you do the same thing again. You take it from there to there, take from the break, or from the, it pushes you into that area, and then you're basically playing it like a slingshot. It's the way I'm seeing it. It's the way I'm looking to take it, and I think that's the best way for next week, in my opinion, if it's going to be the play. Other cases that, as we saw with the failure over here, just look at that bit price action there, and then I'll zoom out on the 4. We don't have a base just yet. There's no base. We don't know what's actually happening in these areas. So until we have a second bottom or a base or something, we don't know if this is going to continue long, but we're not getting good signs off a long. We're actually getting corrective price action into a value area where we could be seeing shorts, and I think that's something that as well adds another confluence to the whole trade idea. The nice thing is the 1 hour and the 4 hour have done enough. We just now need to see the 1 hour and the 15-minute refinement, if it's there, to kind of just fulfill the whole trade idea, so that we start to see this really follow through. And that's basically it for the HK50. So hope you guys found some value in what I just explained there. I know I went into huge depth there, but that's basically the trade idea. If this starts to push up higher, then that's a clear message from the market. Just leave it alone, right? If it starts to do that, then you just need to wait. You need to wait for the pushback in, and then a follow through like that. And that's it. That's as simple as it gets. That's why I think right now, waiting for an insurance entry could save you from a lot of variational changes. But taking a risk entry in this area is not terrible as well. It's just you would have had to be in position better. And the better positioning would have been in these areas here when it was wicking. But then ultimately, it's just the risk. Are you willing to take that risk of just being tagged in and out on a simple trade, which you could have waited for an insurance entry? So simple trade idea. Just wanted to kind of point that out and see what you guys thought. But yeah, and Italy 40, there was nothing really there, to be honest. I could see this corrective. I always knew it was going to be coming up. The nice thing is that it did tap into its value down here, so you can see it create the base, and now it's moving. So we're probably going to see more upwards continuation for the Italy 40. The NL 25 as well, nothing significant. I was looking at something down here, didn't quite come there. It is what it is. RTY, I don't really trade it, but you know what, I was looking at it, and now it's at this area here. I'm interested to see what happens. Obviously it's coming into all-time highs, doesn't always come into it and reject straight away. I think what's the likelihood is we're going to continue higher for a bit before we start seeing shorts. Likewise with a lot of the related pairs. Let's just wait and see what happens over the course. So if we do get a push above, a push back in, continuation, could be in for a treat. You know, you can see how it responded over here. Not so bad. I would be looking for something similar on price action to then get some sort of trades like that from these value areas, and we'll be set to go. So that would be literally the outlook that I'm looking for, is something like that. And yeah, that would be lovely. Honestly, I'll be looking to get position on that nicely. 1 trade, 2 trade, something like that. And then insurance entry, look, this, I can already see a few trades on this. There's one here, there's one here, there's one there, and probably even one there. So, you know, again, if I just size them up just off the rough top of my head, looking at that, so this one over here, You know, that one ran for around about 8. You'd be out. That ran for about 8.6, so I'll be out for 7.5. This one ran all the way down here, 6, 7. Yeah, so same situation, 7. And then this one over here would have run for around about 7 something, so I'll be out for, yeah, roughly call it around about 6. So then alone, just on that one simple run from that high value area there, looking at 7.5, 7.5, 14, and then you're looking at 6. So yeah, give or take, I'm looking at around about 22-ish% on that trade alone. So again, over this course period was pretty long actually. You're waiting from the high value area to be patient as well. It's almost like a lot of that's a long period of time, to be fair, to be in the market. So yeah, I'm looking at roughly 185 days there. So from hindsight, from a distance, it's a long period to be waiting for such a small amount of percentage. But again, yeah, I wouldn't be holding for those trades then in that situation. In a different market condition, yes, but that was my bad for not zooming out on that. Let's have a little look though. Yeah, there's a lot of trades in here straight away. Like, you'd be in and out a lot of these trades as well. I think that's the beauty of it. You can see over here, value area. Oh my god, looks like a pretty decent pair to be trading. Responds really well to structure. I don't know what spreads are like. I'm going to observe them over next week. The US Russell 2000. So I think RTY is the US 2000, if I'm not correct. US 2000. Let's have a little look. I think, yeah, that's the Russell. Interesting. Yeah. So the Russell 2000, eh? Anyway, with the SPX looking the way it looks. Oh, okay. On different data, that now jumps out to me in a different way. Let's have a little look. Yeah, man, I'm going to wait on this one. The Russell 2000, interesting though. All-time highs. Hasn't been here since, well, 2021. So made a return in 4 years. That's a recovery though after COVID as well, for sure. Lovely. Absolutely lovely. Stunning. Move in there. 1, 2, 3. Coming in there. Rejection. I don't think it's going to sell. I think we're going long, but we'll have a little look just because it's the US 2000 now. We'll have a little wait and see. SG25, SP35, Spain 35 is doing pretty well. Spain is moving. I heard they had an olive crisis and they took all the olives from Greece, so they can afford their olives. Yeah, they're doing, I don't know. It's interesting. Are we looking at expanding here for a reversal or continuation? I wouldn't short that, but I'm curious because it's an expanding at a top of an expanding. Which suddenly just looks very interesting. 1, 2, 3. Let's measure that out as well. So if I've got this as a 1, 2, 3. It's basically at the top of its run. It's at a reversal. Wow, I kind of want to just observe this for next week. I'll put it on soft watch. I don't think I'm going to trade it, but I'll definitely soft watch that. Okay, gold. Let's have a little look. Now, obviously, just back to the DXY. We know DXY's got potential for the short or come back for the M-star, so that's one. Gold is looking pretty good as well. I think gold's got some potential in itself to just go sideways. It's at high value areas, so you know, I think what we're really looking at is if the DXY goes long, this comes in, creates a base, and then eventually potentially goes long. So I'll be patient with that. Silver. I think silver's definitely got some time on it. I'll be patient. I think as a value area there, it's tapping into that low, so it's really sitting on the base. I'm not sure about silver, to be honest. I think I was happy with this value area here. Probably be more corrective continuation here. Probably starts making its way into that area, and then we'll have to wait and see what happens if we push down. Insurance entry, that could be good. If not, yeah, it's a tricky one. It is messy, truthfully, especially looking at it on the 4, but I can understand what's happening here. I just think that I don't want to get caught up on whatever's going on right now. Yeah, I like this though. I like the idea of a phase 1, phase 2, phase 3 into that low. Yeah, come on, that's nice. That's very nice. So let's mark that up here. And I think for a next week trade, I would look at this really for corrective price action into this area. Price taps in, pushes back down. So let it just do whatever it's got to do. Comes up, and eventually comes in. Insurance entry. I'll probably go off the bat and fix some of the sizing of my continuations I've drawn, but yeah, absolutely, this is what I'll be looking for, something like that. Obviously, I will probably fix this even more with the news and stuff and all of that, but that's how I'll be looking at it, really and truly. I think this looks really, really good. Really, really nice. I wouldn't even let this low put me off, looking at the trade idea. I like it. Yeah, I like it a lot. That's good. Alright, sweet. So if I look at it from the higher time frame, you can see it there. Phase 1, phase 2, phase 3 pushes into the downside, and then we eventually come down to make our way down here. It's great. It's not going to be so straightforward. It's not going to be all in one day. It could take the month of December and January into February to actually have that. So you could be holding this trade for a little bit longer than you anticipate, but it's all good. Natural gas, I don't think I'm going to be taking any trades on natural gas, but at the end of the day, natural gas is looking all right. Continuation, if you've got continuation in this area, so I'm going to zoom in a bit more. If you had something like that, oops, push that down here, something like this. Probably get something like that, to be fair. Do you know what? I don't like it. I really don't, but I can see the trade. I can really see the trade. Like, you get something like that, fine, it makes sense. Probably even if you took a bit of a larger stop loss, whatever, just because it is natural gas, and then yeah, you'd play that, and it could turn into this trade. It's just, yeah, one of them ones. I think it just about near missed that high as well. Wouldn't let that really put me off the trade, but it would, to be honest. I think what you're going to probably see is that that's not going to play out. What's going to happen is that's probably going to get a bit corrective and then make its way back up here, and then you see some sort of sell-off, and I think that's the better trade to wait for. Wait for it to come back in, take out that liquidity there, and then eventually sell off. If it doesn't do it, then you'll get a clear message from the market. Price will be down here somewhere. You'll get continuation, and then you can get involved on that, but more than likely I'd wait. WTI, I'm not touching it. I think there was some sort of trade ideas there, but yeah, nothing for me. Likewise, UK palladium, nothing at all, really and truly. It is what it is, just there. Platinum, I think you could look for a trade on platinum, but it's just very messy. So I'm just gonna say leave it alone. You know, it is what it is. Copper, I think copper is positioning itself really well from the daily perspective as well. It's really holding this area right now, and I think that this could be a really good sign for shorts. I just don't know about taking a short just yet, because how price is just responding in this area. It's a bit difficult. Like, I look at it from a daily and I'm like, just what? And then I just really look at it and I'm thinking, you know what, this could just get complex and do some complex stuff. Just do that, and then just come back up, and then eventually maybe just drop off. So I don't want to get caught up in copper, really and truly. I think there's a lot of things that could happen. It could even reject from here, just sell. Fair enough. I was looking at coffee for the short over here, but we didn't get it. I was looking for a sort of a push away, and it's just retraced. And I think as well, this is a lot of it is news related. So you know, Brazil had some lack of production, and they're one of the biggest producers, so it was just something that popped up, and I think a lot of people got the news in the media, and it kind of just pushed this price up, which I think is also quite interesting, that the economical data really does influence a lot of the decision making around these agricultural products. You can see cocoa likewise has potential. It's likely to go into those value areas. Corn, again, another one which I think you can see this now. It's probably going to be a banger to go to the upside. Wheat, messy, corrective. Soybean, again, a bit gappy, perhaps maybe because I'm using capital.com's quotes, but yeah, I'm not a big fan of this either. So that kind of summarizes everything that I was looking at for the week. Last but not least, I'll just go BTC. I mean, BTC stunning. I mean, you know, we bang on, spot on, could have made like millions, really and truly. Just again and again, relentless. So what we're seeing over here is I'm looking for a continuation pattern. I'd like to see this come back down into the sort of 90k region, create this, and then maybe eventually just kind of create a base and then eventually go. So we could be looking at some point in January, maybe 1st of January, which would be a banger, but who knows. Into January, I think it's just going to maybe just go corrective, and then eventually we're just going to get that boom. You know, I think that's what we're really looking at, is that boom in price. And then maybe you even end up having something like this, where price ends up creating another continuation above, and then yeah, we're basically in that, and it looks great. So I'd keep an eye on this. I think this could be the next continuation phase for it to keep going, and that will give it the blast that it needs. I think when you do measure it out, then and you start to really just look at it, I think then that just becomes like a really interesting one, where you start looking at some phenomenal numbers, and then you start looking at BTC like, wow, holy smokes. But again, it's just a bit of a speculation on it. I think when I did go back and look at it, it did all line up. So let me just bring that up. Yeah, so again, it could just be me looking at BTC to do this. So I'm gonna just really bank on the bet that 150k is the marker, or call it 149. I'd say this is the sort of region that we're going to be looking at. So 145 would be the place where I would probably be sizing out, and then waiting for the next move, but up to you. I think that's really the gameplay that I'm looking at. Obviously we'll have to wait and see, but 145k BTC would be interesting, especially when you look at a lot of these altcoins and so forth. Where would that leave them? And it leaves them at some super duper all-time highs. I think what we're going to be seeing is some level of consolidations as well across these pairs before they really start blasting, but price action's looking good, looking phenomenal. And likewise, look at the US stock market. It's really nice. Amazon, phenomenal, does pretty well in December. Apple doing pretty well. Google, likewise. Barber. Tesla coming back for all-time highs. Meta pushing. BAC, which is the airline. Bank of America, sorry. It's doing pretty well. BAE is the airline. Yeah, Bank of America is coming up all-time highs as well. Interesting. Ferrari, AT&T. That's the telephone company. Visa. Spending is high. Again, you know, I've been analyzing and looking at a lot of these, and easy to trade. I could, like, I need to get some serious funding. You know, I need to get given some real capital, man. I'll be making some incredible financial decisions, but give it some time. Phenomenal. Look at that. I was I was like thinking at the time as well, I could just, why not? I could put like 5k on that, boom, I'll be up like easily 50k at that point. But yeah, just one of them ones, man. I'll give you 50% return, 10% return a year. Yeah, interesting, so interesting. All-time lows, wow. Look at that Zoom. I was watching Zoom 4 as well, and that was something else. So 85, that's so cheap, This is the start of something else. A lot of people would think that it's expensive, but truly, Zoom, like, I wouldn't buy Zoom though. Zoom's like, I don't see Zoom making money because they're free, and people need a free communication. But some people pay for it, like businesses and stuff, so they do make money. It's just, yeah, I think that's perfect. So that kind of covers it for the week. So this is basically what I'm really looking at, not SP35. That's just a soft watch one, but 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So I will be filtering through this as well. But likelihood is I've got my watch list here, and I'll just have to filter through that very, very carefully. But just looking through it, this is probably what I'm going to be looking at for next week. I'll go low risk on that one for sure. Right. And obviously we understand the whole trade idea. I think one of the biggest takeaways for next week is go neutral on these yen pairs. Just because they've kind of tapped into a area of interest, it doesn't mean it's the area. And there's trades, but we need to wait and see. We need to really see how price moves. So I'm going to be looking at these patiently. There was a few bangers there as well, so that's kind of interesting. Obviously going into next week, we do want to see clear confirmation on a few of these pairs. We don't want to just be jumping into any old average positions. I think something as well, takeaway for next week for me is a little bit extra on my stop loss for sure. That will be the major one. I just want to avoid myself getting a bit of a tag in, tag out situation. If I'm going aggressive, I want to be making sure I'm giving myself a little bit extra breathing room. Likewise, you can see that a few of these euro pairs are kind of dominantly in the same direction. Obviously, we had the neutrality of EJ, especially EJ, which can still go long. So I want to be mindful for that. But then, as we know, that borderline, it comes into these areas, these pairs start to become a little bit more neutral because it comes to the point where we may no longer be looking at, let's have a little look at that, size that up quickly. We may not be looking at the pairs to ultimately play for their full amount. So I think we have to be conscious that some of these things can turn around on us, and if we're not prepared and we're not ready to pivot our thesis, we may miss out and actually take unnecessary losses, or we may opt in for a trade where it's too late and we may miss it, and that could compromise the way that we're thinking. So remain neutral, and I think we will have a much better week ahead. Some of these pairs do need a little bit more time to develop as well, so let them do their thing. Some of these entries are a little bit more aggressive, so they are situational ones. If you're in drawdown, I wouldn't recommend even attempting to take some of these. But again, it really comes down to where your situation, your position for the month, what your skill set is capable of, and when you want to be positioned in the market. Trade like this, if you are going to take something like that, just go extra. Like, there's no harm in it, because then if this does follow through and commit, you're still going to walk away with a 10-to-1 anyway. Like, yeah, you might see this and you might see me putting like, oh shit, 22-to-1. Odds are, man, I'll be out for like a 5, 6, 7, 8, 10%. I'll be out for 10% here, man. I'm not going to be looking at that 20% flattering myself. But maybe I will, maybe I won't. But the odds are I'll probably be out for 10% here. So at the end of the day, if you can go extra, go extra. If you can't, because you can, then yeah, whatever. The long thesis here as well, that's basically clean cut. Obviously that could be a larger 1, 2, 3 as well. It doesn't have to be like so squeezed like this, there could actually be another set to it where price comes here and then comes down again and then goes. And I think as well that is something like I said, I'll interpret the data when the time comes, but if I can manage it from A to B, then so be it. So that's the trade idea there. GU, I like GU a lot. I think from all of them, GU is the favorite for sure. It has been throughout the year actually. Just like I said, didn't capitalize as much as I wanted to, but definitely was a favorite. 10 to 1. Yeah, I'm happy with that. And I think that's, let me just mechanically manage that for a second. Yeah, perfect. I'm happy with that. I'll take those odds every day, and I'm happy with the extra protection. Again, same situation I said with GN. You know, it could develop a little bit more. That could be section 1, section 2, section 3, but if I can manage it, fair enough. I won't go too aggressive, just enough so I can manage it well enough, and then I'll play that into the high. But I did, I don't know. I'll have to really sit down and compare them both, and then make a clear decision on. But I'll probably keep them side by side. I'm not gonna pick one over the other. UJ needs development, but I think I would enjoy watching it develop and just having it on the sidelines, not acting on it, but for whatever reason, news comes out and it spikes and gets there. Cool. It is what it is, but I think it could present some goods. So ultimately, that is going to be a place of interest. I personally think that when I do come to putting this down, I'll probably be looking for an AFT entry in these areas, just kind of pointing it out. But for simplicity of the video as well, and what I'm really going to be looking at, I think this is the safer option as a reset for the week. If I'm not in profit at the start of the week, then yeah, so obviously it is what it is. And then that would be this entry here. So I'm going to be looking for impulsive price action to the upside and continuation, and then obviously it won't have to look just like that, but it just represents what I'm looking for. Top loss extra protection, and then we just go. Maybe I'll go a bit extra protection on that one right there, and that's good. SP30 now, I think this one is interesting, but it's not yet done everything it can do, so I think I would give it some time, and then as it does this, it will drop, and then when it comes into these areas, which probably goes into the week ahead, I'd probably be interested in it. I think that is something that I would be more interested in, because I'd want to see some sort of signs of a reversal as we've broken above this. However, if we do drop off and we're over here and we get that, great, we've got a trade next week. And hey, maybe I might opt in for it. I mean, I wouldn't not opt in for this, right? Because I saw this about a year ago on Germany 30, Germany 40, and it was stunning. It played out really, really well, and I made some decent profit on it. So let's have a wait and see. I'll probably put a bit extra on it, 36, around about there. And yeah, we'll wait and see how that one plays out. Germany 40, I don't think there was anything there. I don't know why I marked this one on, so I'm just going to mark that off. And then the Aussie 200, I think that looks alright. I think I'll be happy to look for shorts on this one, to be fair, as long as I can manage it into that next point, which is there. So any trade below this area, if I get continuation here, I'll take that. Stop loss above, call it 30 pips. I can manage it into there for a 2 to 1, that's fine. And then we'll play the bigger move, so that's all good. That one's happy as days. All good. So that's my watch list for next week. I'm thinking that USD CAD could make it in here as well, I'll be honest with you. It's in the back of my mind, what about USD CAD? But I'll be honest with you, USD CAD could make it in here as well. I'm gonna wait though. I'm gonna have a little reevaluation myself. I'm gonna take time off now, go relax, go do some other stuff, come back, look at the charts again, and then redo it. But I know I took a lot more time with this one because I wanted to go with more emphasis and kind of just release a video, because it's been a little bit of time since I released a quite good quality video out of you guys, and I know I've had a lot of messages in my inbox asking when's the next video, this and that. But you have to understand that I've been quite busy. I'm actually traveling to West Africa actually next week, so I'm going to be in Gambia, so that's going to be awesome as well. So well, this, yeah, in a couple of days I'm going to be flying, so that's going to be awesome. And I won't be releasing a video probably for the rest of this year, so that's why I wanted to kind of put out something with a lot more time and emphasis, so that if you were looking for some content to watch and you didn't have something that you wanted to just see someone else's thoughts and what they're really looking at for the outlook for the next week, the week to come, and so forth, that's why I wanted to actually post this video, so that it can actually give you an insight to someone else who's also trading the same way you're trading, and yeah, just give you that value there. So yeah, I hope you guys have a phenomenal December. I hope you end it really, really well and you tick off some of them goals. I think the biggest goal shouldn't be monetary this year. I think the biggest goal should actually be in terms of self-reflection, what you've achieved and where you're actually going and what's really next for you, and setting goals for next year. So vision board, goals, where you want to be by the end of this year, because the year's not over. How you're going to double down, how you're going to start next year, what you're going to be changing, what you're going to be doing, and those sort of things are really going to set you up for a really, really good year. If you have any questions, you have anything at all, best place to message me is probably Instagram, and I'll be more than happy to get back to you. So take it easy, guys. It was a pleasure, and I'll catch you guys in the next one.